Good morning. Hold on, I'm just getting the Discord audio up. All right. Crap. GLTA. Get those trendies and buy more shares. Thank you, newbie. I appreciate that, man. Bob is showing what tanking really means. Did they have their earnings? Gotta kind of pick up this bounce. They must have had their earnings. It's awfully cheap for Baba. What are you doing, Caterpillar? All right. Baba 40 negative 40% earnings. Damn. Can Ivy crush with a price increase depending on what price was recently, or is crush always down? Um, so Ivy doesn't always crush on earnings, but it can. Ivy can pick up after earnings also. Like if the market doesn't predict the volatility from earnings, then Ivy can pick up. Good morning. Today is a shameful day. My second membership paper hand. It's all good, man. But the holidays are here and I'm buying 0 DTEs for everyone for Christmas. When's the next book coming out? George R. Martin. Maybe newbies might learn something from reading the balance sheets. I think we've gone over GameStop's balance sheet on stream before, Matthew. Like a while back, but I think we did. About tomorrow, if one was to buy 1126Cs, it would be better to wait towards the end of the day. I probably will. Looks like I found a reversal at a higher floor. So a bar doesn't always come back down to the original trend, right? Like it can bounce higher. If it can find a floor higher, then this is the reversal point, which looks like it started yesterday. I haven't really been watching Tesla. I've been kind of busy, but Oh no, it's rocket on open, slow hammer it down. It's interesting. GME price action is definitely changing a bit, and reminds me kind of the, like, I believe it was the run up in June. Like how we kind of just climbed, and then we had 2 down days, which I believe were the Fridays previous, uh, or May rather, 20th, 21st. And we just climbed right up into the ETF exposure date. This may be an indicator that they're rolling, but I'm not sure. Because that they can pre-buy, right? If they're going to pre-buy something, they can pre-buy the roll. Oh. Buongiorno, the job. Good morning, Zakir's wife. Would you wait until the end of the trading day tomorrow to buy calls? I'm going to. Yeah, so today was last in May. Today was pretty flat. I think today is already up more than May was on a similar day. Exposure. What day was the 25th of May? Was that a Tuesday? So Monday, Friday. Thursday was rad. But it does remind me of that. Thanks. Looking forward to your next 2 parts. Thanks, man. Cheap contracts win. We'll see. Here's the thing though, the roll isn't like something they can hide buying on like million volume days, right? Like rolling those contracts requires a massive amount of volume, or it has in the past. Like I don't think we'd miss the amount of volume necessary to roll those contracts. They may have to roll them if they're expiring. Sweet that you don't have chat imprinted on the screen. I don't even know how to do that. I mentioned it yesterday, but yeah, the steady climb this week is interesting since it started putting a lot of gex out there for next week. Yeah, I mean, the the higher we are, like if you just like look at the last quarter, right, when those contracts were written, like it's possible that everything in at least this range is in the money already. And the more we go up, obviously, the more goes into the money for next week. So if they pre-buy the roll, that would make sense to see the next dip after. Yeah, we would see the dip occur. Zakir's fifth wife. I'm told Zakir's fourth wife is gravely ill and may be moving up soon in the lineup. Fingers crossed. um, yeah, we'll see. We'll likely see a dip after the roll date if they roll, right? But I think we'll have a very good idea of that soon. Check out the correlation between AMC and GME at the moment. Definitely not the same. Do you believe in the TA we are now in? There's like a consolidating wedge. I think we broke out of. There's really not a lot of TA here. I mean, I guess there's like a smaller wedge. Fair. Like we had that big wedge back here. Um we have like the log floor like right there. Which kind of which is kind of where we bounced. But too soon. Yeah, I'm almost done. I did as much as I could last night, but it's not finished. Book 3 is easy. It should be pretty quick to write. So I'm hoping that I'll take a nap after stream today and get those done. I'm sick now, so that's fun. Um, Probably because I haven't been sleeping for like the last week. What is pre-buying the shares needed for the roll imply for price action next week further out? I mean, they could pre-buy like some on this volume, but not like a significant amount. Like the volume is too low. Does that make sense? Like they need far more volume and liquidity. And if the original short position is tucked away in these like ETF futures, then it's possible that the losses on that are quite substantial when they go to roll, and that's why we see so much volume occur. Obviously a lot of that short position is down around like negative three or down around like $3. Well, it's like 80 something cents, I think, to $3. Look at the weekly. Ah, $2, 57 cents. So it's already significantly underwater. So I'd imagine the losses that accrue on it on a $10 price jump are pretty significant, considering that they couldn't get out of the position anymore by the time the price had gone up, 750%. They definitely can't get out of it now. So the only option would be to roll because we know what happens when they fail. Um, Last quarter, they got a significant amount of shares, likely from the ETF rebalances and GameStop's at the money offering. Yeah, I'll try to repost a Wall Street Bets this weekend, like all of it. Are you selling any CSP next week before the run up? It's tempting to sell an at the money weekly. Probably. Um, I'll probably sell some around. I don't know, slightly below the money. Uh, Use the credit for buying calls. Matt Kors never gets sick. I don't care what Matt Kors does. Volume picking up a little bit. They borrowed about 200,000 shares this morning, so I wouldn't be surprised if we see something interesting happen. But maybe they're just going to use those across the rest of the day. Usually, when they borrow that many, like right before market open, we see them just short the open. But they didn't do that, so. And I don't think volume is even equivalent yet to the number of shares they borrowed, right? Yeah, it's not. Sorry, one sec, guys. There we go. All right. Anything they pre-bet is putting this week's call contracts in the money that will need to be purchased by open on Wednesday next week. Yeah. Yeah, so if they pre-buy, they create more exposure. What time are you getting those 11:26 tomorrow? I see some people entering today given IV going up. Um Hold on. One sec, guys. right. You settled from the move? No, I'm still sleeping on the floor. I haven't had time to go like furniture shopping, so supposedly my mattress I bought is getting delivered sometime today. But the dude I bought it from is kind of shady, so we'll see how it goes down. Nah, I'm just kidding. They're great. Um, see, Max Payne is up more. Yeah, call volume's picking up. NyQuil, thank you for your hard work and continued drive to share knowledge. I greatly appreciate all you have done and continue to do. Get some NyQuil and feel better. I have NyQuil. I have your nemesis here, Dayquil. Um, I'm sorry. I didn't mean to betray you in that way, especially right after your fat donation. Your sick voice is so sultry and deep. Thank you, Taken. Missed a pigeon whale. Where? Oh, Landis Versenviner. Uh, Landis Vers. Whatever. Um, thank you so much, man. I appreciate that. Let me get you some sweet tunes. Pigeon whales, flock. Or you probably have already because I missed it.
It's a motherfucking pigeon whale. I scream certainty. $100 a month supporting Pi 5 stream. Pigeon whales coo and the profits don't stop. Praise be to that pretty lady named V. I hope you ain't gonna be a paper in a bitch you see, but most likely you will be. To be entirely honest, I can't imagine what you'll think with an extra 100 bones not in your piggy bank. But at the very least, it's safe to say you're smart enough not to be selling cover calls like Lumen, cause that's fucking rough. Once the day comes when GameStop finally leaves the stratosphere, we'll all be pigeon whales on Girk's yacht. Hey, will you let me steer? Hey, seriously guys, not a cult. Not a cult.
All right, hold on. That was quite the cafe. Thank you, Landis Weisner. I'm not good with the German. I'm not Steve Cohen. Okay, let me answer this Kofi because it was a bit lengthy, but I guess I could cover some of it. Okay, is it possible to explain what it means when they fail to roll, and why they have to buy shares in reference to a futures contract expiring? Are they closing actual short positions, or is it some mechanism in the contract that raises price? Okay, I do not know if they reduce the number of contracts they have. So there's two things that could be happening here. Either they are closing some amount of short positions every time they roll. Or whoever internalized that loss, likely Citadel, possibly Susquehanna, because they also have the capital to do this, internalized the Melvin's short position. And that requires they hedge before they roll. So, um, these are our two kind of working theories on this. It's really hard because the information isn't really available. But everything else we know is kind of led to this idea that now this is on top of the variance swaps and the future contracts from ETFs, which work a little differently and also kind of act as a hedge against volatility in the underlying or the NAV. Um, so either when they roll, they close some of the contracts, um, and move the rest forward, or they if they've internalized it, then it's sitting on their margin, right? And now, as long as it's a written futures, it can act as a credit. Um, but on those dates where it rolls over, that hidden position becomes exposed, and so they have to cover the losses from it before they can pack it back up and use it as a credit on their margin again. And so what I think they do is they buy, if they've internalized it, then they're buying shares in order to prevent that overflow of that short position from killing their margin, right? So they're buying short shares in advance of the roll to hedge that roll showing up, that futures position showing up on their books. I think when it does, either way, it presents a great deal of risk for them on these quarterly cycles. I just became a billionaire last night. Should I message you on Discord? You can just message me on Discord. I'll send you the instructions, or you can go to the announcements channel, Shitsu, and the instructions are pinned to the announcements channel for how to link your YouTube and Discord accounts. And that's one more thing about Ghost Dan's question there, and that's why I think time is not on our side either way. Um, because if they can stabilize their, like, if they've internalized and they can stabilize their margin, they may be able to start writing those contracts further and further out. And then secondly, if they are simply just covering a small percentage of contracts every time, then that means that the total volume of that old short position is diminished every time they roll it over. And that's not good either, right? So it's either they're covering shorts or they're moving shorts forward until a point where they can cover them. It's likely the latter. I don't think they're covering because they didn't before. I don't see why they would now. So it is more likely that they are just simply uh, rolling the contracts so that they can then use them as a credit to their margin. Because once they can sell those stocks, that those shorts in that contract, even if it's just amongst each other, they can then write that as a credit towards their margin. Kind of like a bull call spread, where you like write a cash secured put and then use that to buy long calls. What are your thoughts on? Sorry if I'm missing some chat. I just wanted to go over that. That's kind of like a little extra on top of the DD. I didn't include it in the DD because it's complicated to explain. No, answer my questions. Are you purchasing the calls tomorrow near the end of the day? Yeah, I said I was. Do you think it's causing this week's sustained upward price movement? It's odd to me that the price hasn't pulled back so far. It is strange. We'll see how the rest of today plays out. I think today will be a very good indicator of if we're going to see a large price pullback or if we're going to kind of just remain flat and then continue to climb into the exposure date next week. WeBull price is frozen? No, just no volume trading. Does this uptrend surprise you? I mean, I knew it was possible. It happened in May. So it doesn't surprise me. What's more shocking to me is that they're unable to bring the price down, which is obviously ideal for them. They are bringing volatility down, which is good, but only so much. And then, but being unable to bring the price down is interesting. It tends to lead to that, steady growth that implies a roll. Whoa, Pone, take a good care of yourself. There's only one of you. Thank you so much, Pone. I appreciate that. I got your messages this morning. I did not have time to respond. I really appreciate it. That's super cool. Thank you so much. Pone, what the fuck barbecue, ladies and gentlemen. Excellent DD writer, math quant, smart lady. Insert mattress plug. What's that? Plugging the mattresses. How far behind in chat am I? Yeah, I just saw it. Who the fuck is this barbecue person throwing money at you, man? They trying to make this a competition? I don't think that's the case. Pun prolific DD writer. So they can't do what they've been doing. That's so crazy. Thank you so much, Pun. So if you're Citadel 0.72 Melvin on Jamie, what's your move if you can't drive the price down? You try to get people to load up. Well, essentially, you have to wait until you can restabilize. They have to wait until they can restabilize their margin and start using those in the money puts to push the price back down. So after that roll, once they can stabilize their margin again and use that credit, then they can start, selling those in the money puts, buying long calls, and, using a massive amount of leverage to synthetically short the stock back down. Now you just need Yella and Roaring Kitty. He owes me a wrap off now. I'm not doing a wrap on stream. Pone. Rap battle for MOASS. This is not my forte. Is a long call the same thing as a leap? I mean, a leap can be a long call. A long call means you're buying to open, right? Yeah. Long call, buy to open. So you're essentially buying somebody else's sold contract. Okay, what's with all the F's? If DFE came in here and donated and requested a rap battle for MOASS, would you? Okay, hold on. No. DFE's not going to come in here and request a rap battle with me. He's from Brockton, Massachusetts. Bexby, thank you so much for becoming a Dillionaire. I appreciate that. Hit me up on the Discord. I'll get you added to the country club after the stream.
Yo. Let's get it. We're not a cult, yo. Just some pickle themed fuckers, not a cult, no. Like them AMC suckers, not a cult, bro. We some GME lovers, not a cult. Not a cult.
They didn't kidnap me. No, not everybody panic. It's MOASS. Carl, you're a moderator. Your job is supposed to be the opposite of that. Supposing we end the week above max pain, wouldn't T+2 GEX cause more issues for short hedge funds going to 1123? Could they try shorting Tuesday after hedging? Yeah. So depending on how high above max pain we close this week, that creates, more exposure here. Well, I guess, hold on. This is Friday. And then the weekend ends, right? And then the exposure from this will play out in T+2, right? And we could potentially run on any of these days. But yes, the price being higher means more contracts are in the money, which then increases GEX on the other side of this. From these, not only GME, like it's very narrow-minded to just look at GME in this situation, right? Where a lot of the options interest is in the ETFs, right? So if those ETFs are up, and those ETFs are, those longer term calls on ETFs are getting exercised, that's what's going to create and this is really common for institutions to buy long calls on ETFs and exercise them, right? And so this presents a massive amount of exposure. This, is minimal. If you go and look at GME monthly gamma exposure on like the parts of the cycles where we don't have the simultaneous ETF quarterly exposure. So if we go to like when was the last GME monthly? It was like October's 15th. Yeah, so if you look at like October 15th, not a lot of exposure in that T+2, like a little bit. Like we had this little jump in price. But it's significantly different when we have the ETF exposure on top of that, because then it's more like what we saw in August. Right there. Is my mic on, but not my... Whoops. My camera was off. Sorry. So, I mean, that should give you an idea of how much more of this exposure is, in fact, from the ETFs. Oh, I'm trying to catch up with all this. Okay, everyone can stop panicking. All I did was change my payment method. Doesn't matter. Get a song. Personally, do you think TA is garbage? But I respect the pickle man. He does solid work and is a good person. Thanks. Thanks, Pan. Yep, that's right. You can disagree with somebody's thesis or work and still respect the effort put into it. I appreciate that. Cam is off. Criminally behind on chat. Claw Range. Dude, thank you so much, man. Hit me up on the Discord and I'll get you added to the Pigeon Whale Royal Society for the advancement of cooing and other lofty goals. No, but seriously, dude, I appreciate that. We get you a sweet Pigeon Whale jam going here.
It's a motherfucking pigeon whale. High scream certainty. $100 a month supporting Pi 5 stream. Pigeon whales coo and the profits don't stop. Praise be to that pretty lady named V. I hope you ain't gonna be a paper in a bitch you see, but most likely you will be. To be entirely honest, I can't imagine what you'll think with an extra 100 bones not in your piggy bank. But at the very least, it's safe to say you're smart enough not to be selling cover calls like Lumen, cause that's fucking rough. Once the day comes when GameStop finally leaves the stratosphere, we'll all be pigeon whales on Girk's yacht. Hey, will you let me steer? Hey, seriously, guys, not a cult.
Thank you so much, Claw Range. I appreciate that, dude. Praise be to VWAP. Dr. K, if they survive the roll and use put leverage to drive the price down and then utilize their in the money put long call strategy, does that make it more likely that December action be more violent? Well, here's the thing, right? So if we're looking at the next exposure date in December, which is here on December 22nd, and then we have the roll dates 10th, fail date 17th, I believe. We have our upcoming fail there. Okay, so we can expect the price action to kind of so we run here, right, on this first exposure date. And then by December 1st, we should have a very good idea of if they're going to continue rolling or not. Let me change. 1 second. Let me just change my pen. All right. So we come up here. And then we're going to have exposure from this, right? From this run, from weeklies, these 11/26 weeklies. And that exposure is running out here to December 1st, right? So we can see the price kind of like chop along here to the upside, with like a little bit more exposure here on December 1st. And then after that point, if we continue to see volume and price pick up, it's indicating that they're rolling those contracts, right? This seems to be the break point in every cycle where it determines if there is a roll or a fail. If they roll, then that puts a ton more contracts into the money, right? Out here on this ETF leap and GME monthly date. Now, these ETF leaps should present even more exposure. The GME monthlies should be relatively the same. But, if we have all this upwards price action between now and then, obviously a significantly larger chunk of these contracts that are currently written will be in the money, right? And so the higher our price going into each of these exposure dates, the higher the amount of gamma exposure coming out of them. Does that make sense? Especially because not only is GME extremely call side heavy, but so are the ETFs that GME isn't in. So maybe that gives you a better idea. Now, if they fail, the price should stagnate in that window. All the way through expiry, and they could try to drive the price down, maybe even to the level we're currently trading at. But sorry, I'm still having any coffee. Where was I? So yeah, if they fail, then they risk the FTD pileup starting very shortly after this ETF date. So all they do by failing really is move the price action from this window out to here. Even more than $1 dropped color rug pull. Yeah, this isn't a rug pull yet, although it is somewhat indicative of some shorting. Don't forget they borrowed, 200,000 shares this morning. Oh man, I got a lot to catch up on. How am I so far behind on chat? Someone in Discord this morning said that the shorts are unwinding their short position in the retail ETFs. I mean, short interest on XRT has gone up. So I don't know if that's the case. Hartley. Fred passed me a note behind the dumpster. Remind Pickler to take his vitamins. Dude, thank you so much. Sanjit! I have been. I've been drinking tons of Emergency. Because even though I know it doesn't do anything, it makes me feel better about it not doing anything. Thank you, Harley. Sanjit. We're on to Sanjit. Dude, what's up, man? Good morning to Pickler. Hope you are well and going strong. I'm very happy to seeing all the information. Always supporting with Pickler and friends. Going okay. Best regards to you as well, Sanjit from New Delhi. We appreciate having you in here, man.
Sanjeet's in the house, Sanjeet from New Delhi. When GameStop moves, his friends will be jelly. The rest of his country is sleeping sound, but he blesses Pickles channel because the profits abound. He turns on the stream without even looking, just to see what Chef Gherkin's got cooking. For him, it's a 2 a.m. power hour. Sanjeet's gonna make the short hedge funds cower.
Let's see here. In the money puts, where's OI picking up? 220s, 300. Lots of, here we go. So lots of 212.50 puts near the bid. So I'm going to assume they're selling those. 210 puts are picking up, 220 of those. So yeah, I would say that we're seeing a little bit of in the money put volume coming up. Also likely coming down with the market. Interesting. It seems significant. I wonder if this drop is enough that I should bail on some long stuff. Curious. Reverse MOASS. New Pigeon Whale and Sanjit Wu. Do you know where Ribbon is heading back to 70? Rivian. I mean, it's down a lot today. Yeah, it's the SPY still doesn't look super great either. Was called to Greg in Core's chat. Mission accomplished. You've been awesome, man, and I have some lofty goals. Thanks, Claw Ridge. I appreciate the membership, dude. If they roll this cycle, how does that affect our chances of MOASS in June? I still think they have enough exposure throughout the rest of the cycle. Or July? Or January. Oh, sorry. January. I think they still have enough exposure in the rest of the cycle that if people are buying long dated calls and exercising them, MOASS is still very likely. I'll cover that more when I finish the second part of the DD tonight. This is what everyone wanted all week, right? It was like cheaper options contracts. So that white text on yellow is unreadable. Is the notice date the cutoff for the variance swap? Meaning that is the point in time when the IV gets used to calculate P&L? If so, would that explain why Tuesday, Wednesday run? Yeah, it could. Except I don't think we're running next week due to the variant swaps. Like I think the hedging of those swaps has an effect, but I think that's more to do with the futures rollovers that we're seeing. And also, yeah, the increase in price action that we saw in January, I think it was largely in part due to those variant swaps. Is rolling all or nothing for them? Have they ever rolled part and failed the rest? I don't know. It does appear that in April, like if you look at April, we still have a lot of movement. The FTDs were still really high, even though they had rolled the contracts, right? So we still saw like these exposure dates, these FTD exposure dates play out. And we still saw fairly high FTDs all the way up into June. After June, it's much more minimal. with only those really seeing any significant upside. So it does appear that there are some FTDs either way, but the effect of those is, magnified if they do not. Like the number of FTDs we see hit the market goes up significantly when they fail to roll. When DD option strategy DD needed. If you need me to write you a weekly options strategy because you don't know what you're doing, then you probably shouldn't be playing options, right? Also, the thing you're asking for isn't really in your best interest as an investor, right? You want me to write like an ideal option strategy for Wall Street bets so you can get front run? Sure, I've had such a simultaneously boring and hyped week in this whole saga. Excited for no action fulfillment of your thesis, bored with no action and waiting to move. I know how you feel, man. What time is the last call for options? And you can buy them all the way up till 4 o'clock, but I'll probably buy it a little bit before then. If you guys could drop a like, big help. Are you buying any December 3rds on 11/26 or 11/29? Maybe. If the price comes down decently, I might try to pick up a couple just to capture any possible movement, but it would be December 17th, not 3rds. I have no intention of playing the 3rd. So I might pick up if the price comes down a little bit before the. So if we spike on the 24th, 25th's a holiday, so 26th, 27th. If I see the price dip a little bit, but not too much, like I don't want it to come down hard because then I definitely won't buy any 17ths. But if I see a little bit, and then like I might buy like morning of the 27th. Some December 17th, maybe like 5 contracts or 10 contracts, something like that, just to see what happens with the with the roll and also the exposure on the 27th. Like from those 11/26 weeklies. Jan options around 300 to 350 are almost as expensive as Feb. Might as well just buy Febs. Febs are better. January options, yet again, January leaps, missed the window of opportunity. Like last year, January leaps were on the 15th, right? And as you are all well aware, the 15th was good for people that had them. I think DFE had these, but he also had April. But missed a lot of price action by being in on January leaps. Historically speaking, I think people bought them because they were cheaper, but Jan or Feb for cat calls. I moved mine to January. Earnings expected after January expiration. I still have my December 17th 210s. Does failing to roll cause any extra stress on what? Extra stress on the next expiry. It does further out. Like if we go to our guide to MOASS out here. Hold on. Let me open this for you. All right. So if they fail to roll, right, that causes more exposure on the FTD dates. It gives them like a lot more FTDs to cover. So it causes extra stress on these two ETF run-ups that occur after the initial one we expect next week. So because and also, you know, does things like puts us in the running for the reg show threshold list. Which is what happened last year when they failed to roll. There you go. 1 second. Would it not be worthwhile to sell Jan 1924 calls to buy Jan 2122 calls? That's something you can do. Yeah. Lucid ready to bounce. Could be. It looks like it just came down with the market. Am I getting burned on my SPY calls yet? Yes. Plan on buying lower strikes further out and higher strikes on Tuesday, Wednesday. Then would you sell the higher strikes first or the lower strikes? I would sell the higher strikes first on IV. The lower strikes, you have a little more time to exit. So if things that are in the money or deeper in the money, you have a little more time to get out of. But more than likely, all of them, right? Yep. Closing that out. Do you plan on buying the lower strikes? Contract value dropped, say, $100 in value today due to IV or price action. I think theta is negative 0.55. Would it be the same? Or it's 0.55. Would it be the same as waiting to buy a day later? Sorry if this is confusing. I'm not sure what you. If contract value drops, say 100 today due to every year price action, and theta is 0.55, would it be the same as waiting to buy a day later? You can use an options calculator to figure that out. No. Depends on there's. It depends which like contract you're looking at specifically and days to expiration. Theta to decay increases the closer a contract is to its expiration. Like 0.55 theta seems awfully high. Is that what's on the weeklies? Like the only ones I know of that are 0.55 would be like not even at the money one DTEs are 0.55. Like 0.55 is like sorry, Jimmy. Hold on. Jimmy does price this differently. So I guess these are like 0.99. I mean, the only thing that's going to have that high a theta is something that's about to expire. Like next week's aren't that high, are they? Oh Jesus, they are. So I guess a 217.50 is about that. So if it dropped $100 today on IV, it'd be the same as waiting a day to buy later. Why not both? Right? Like if it's dropping on IV and price action today and theta, like you can buy it tomorrow. That's the rate of theta decay, right? So it's going to lose like $55 per tick of theta. But like a day isn't a good measurement of that. That tick doesn't necessarily occur once. It doesn't like occur once a day, right? It occurs more and more often as it approaches its expiry. I think that's the question you're asking. Still not sure though. Natural light, you're fucking glowing. Thanks, Carl. Is buying November 26, 215 Cs and selling November 26, 250 Cs a bad play because it limits your upside? Like a poor man's covered call? I mean, yeah. It's kind of. I don't know. I wouldn't do that. What are your thoughts on buying options with ETFs that hold GME, like FTXD? I appreciate you. Well, first, JSTARS, you want to make sure that the options chain on the ETF you're looking at has liquidity. Sometimes some ETFs don't trade a lot of options that hold GME. Some trade more, but definitely not a bad way. It could be cheaper potentially. I actually kind of want to buy some XRT calls on this next one and see how those play out. The recent dip, are you still in UWMC? Yeah. I haven't sold any of it. I'm just holding it. Is your Discord working? I believe so. Yeah. Will there be 9 parts to your trilogy like Star Wars? No, just 3. Is now a good options entry? It could be. I don't love it, but it could be. I think if it was, you've already missed the good options entry, which was back here. Should it be best to not hold any weeklies past Wednesday, in your opinion? I don't intend to hold any weeklies past Wednesday. I think that's the scenario where I buy a few December 3rds. Like if nothing happens from Monday through Wednesday, I'll roll whatever I have remaining into December 3rds for those weekly plays, like whatever I haven't lost already. This doesn't look good. Yeah, good call. Guess I should have stayed in those puts. You ready for the megalomania? Once you're the richest man on earth. I mean, I wouldn't be, right? There's people with more shares, way more shares. I'm glad Mo came with you to your new place. You look radiant. Thanks. You think LRC just found a bottom? I don't know. I'm not even watching it. Um, could you reiterate your explanation for the price action November 3rd and how this could affect roll fail action for next week? Okay, next week's price action big deal isn't the roll or fail, it's just ETF exposure. Is it possible they covered earlier this month and call options for next week are not worthwhile? No. Why do I feel like it's the same person asking me the same question over and over again? The price action on November 3rd was just ETF exposure. It was just FTDs from the ETF exposure. Um, so ETF FTDs from the fail date, right? Is that correct? Hold on, let's look at this. I believe that was. That's not. What was the expiration date? The 17th. So we have. Is that 3 bars? Oh, there we go. 3 bars. 34 days. 6 bars. There. So you have T plus 3. 35. and T plus 6. That seems like a better explanation of what occurred there than they covered early. What do you realistically predict the peak price could be? There's no predicting it. Our bid ask spread at the money right now is, what, 43 cents? This will go up as liquidity dries up even more in the event of a short squeeze. This bid ask spread could separate by as much as $1, $2, $3, $30. You just don't know. There's very little liquidity in GameStop as it is. That's the reason they're so exposed now. Because when they go to hedge and they need to hedge, the only way to create liquidity is synthetically. And then synthetic liquidity creation leads to more exposure on their settlement dates. So, but there's no way to predict where it could go, right? You can just predict that it will go up, but how high is determined by several other factors. If it doesn't get high enough to cause forced liquidation, then you're just not going to see MOASS, right? They're going to push the price back down, and we'll go flat till the next cycle pops up. If it does go high enough to cause forced liquidation, then we just have no idea. Like, an event like this has never occurred, so there's no predicting the upside. The potential is infinite. And if it plays out the way people expect, with the amount of share lockup we have, those prices can be as insane as people predict. Like, the possibility is there. But no one will know until we're in it. It running now, fam? What's running? Prisby VWAP, Economist Moist. Check this shit out. Hedge fund Balyasny bans hiring from Ken Griffin's Citadel unit. Interesting. I don't see it. I can't see it. I'm like blocked. This is Bloomberg. Oh. Pallets here getting pretty low. Good entry. How low is it? I bought some leaps. Did it dip more? Jesus. I should have waited. Yeah. I mean, yeah, this is a good entry. Like, an entry around this price point is very solid. Pre-August run up low price was Thursday around 2 p.m. Lowest IV was Friday at 3 p.m., but price was $7 higher. Lowest price IV combo was 10:30 a.m. Friday. Past perform not equal to future results. Yeah. I know. I bought my calls for the August run up, I believe, the Thursday before Nathan. And since we're not coming down to like, it's pretty obvious that we're not going to come down and test that maybe we could test like the EMA 60 today. Or just on the daily. Like, if we could come down to the bottom of this wedge, I would look at that as a good entry. Let's see how, the rest of today shapes up. The SPY looks like it's not regaining its ground, so it may come down a little bit still. And that'll help drag us down. This message sent at 10:42. I know. I'm 10 minutes behind. I mean, I'm not buying all my options on the 19th. I'm just buying some. As we move into next week, the rate of decay on those weeklies. Let's put theta. Is going to go up, right? So they're going to lose more money. Those contracts are going to lose a lot of money by, the first, second day of next week. What are your thoughts on how your DD has been received? I mean, I haven't even begun to get caught up with the insane number of messages and shit I have on Reddit right now, but I'm glad. It's cool. I think I missed a pigeon whale. Did the chat jump? Oh, Fang, dude, thank you so much, man. I appreciate that. Thank you so much for the membership, man, and the support. I really appreciate that. It's super kind of you. Hit me up on the Discord, and I'll get you added to all the important channels and the Royal Pigeon Whale Society. I appreciate that, man.
It's a motherfucking pigeon whale. High scream certainty. $100 a month supporting Pi 5 stream. Pigeon whales coo and the profits don't stop. Praise be to that pretty lady named V. I hope you ain't gonna be a paper-headed bitch you see, but most likely you will be. To be entirely honest, I can't imagine what you'll think.
Oh, okay, Big Dilly style.
Not in your piggy bank, but at the very least, it's safe to say you're smart enough not to be selling cover calls like Lumen, cause that's fucking.
Thanks, Pun. See you later.
Finally leaves the stratosphere. All be pigeon whales on Girk's yacht. Hey, will you let me steer? Hey, seriously, guys, not a cult. Not a cult.
12/14 estimated earnings report for GME. No, I would say the GME's earnings will be on or before the roll date. I mean, at this point, an announcement from the company does nothing but just further exacerbate the exposure on these hedge funds, especially if it's like a bullish announcement. It does mean no more shorting. Batty McBadface. I'm not sure if it restricts operational shorting, but I think it does that also. Explore your work, Pickle. One question: if we finish the week above max fan around 210, would it be worth buying the majority of calls for next week, tomorrow? Expecting they have T+2 for this week's options on Monday and Tuesday. No, I'm still sticking to my plan. Why is everyone so fucking panicky? What's your personal floor? I don't really have one. I'm not paying attention to the price. I'm simply going to wait for forced liquidation and then follow the technical trend, and exit over the curve of price action. I think the floor thing isn't like that's you're just gonna, you know, just if you have like a personal floor, you're just gonna sell all at one point. Like that's what that seemed to indicate to me. Like people are like, oh, I have a 10 million personal floor, which just means they're gonna hit 10 million, they're all gonna sell, and then we could go higher. You know, it's just I don't know. I don't think that's a good exit strategy. I did write an exit DD for how I intend to exit my position. How much IB is too much IB? The strike I'm looking at is up 12% today. I mean, is there another strike that is cheaper with lower IB? If you're hellbent on that strike, then is it? It's me again with yet another. God damn you! So So I'm adding EMAs to GME because the volume is so low. I don't want to add super fast moving EMAs like the 8 or 9 or I want to like I'll use a slightly faster slow EMA. If our especially if our like volatility's starting to pick up and we're seeing a little bit more volume, then I feel comfortable adding that additional slightly faster EMA, right? But I don't want like a fast moving EMA because we just don't have the volume to support it. Like if we do pick up volume and some volatility, then I'll use faster and faster EMA like moving averages in order to better track the price trends. Do you think we get back to 200? I mean, we're having a hard time getting back to 200 now in a time when we traditionally drop to our low. So, what price at the bottom of the wedge? The Dorito of Doom guy is right. It's just, he's just drawing the fucking logarithmic trend line. Everyone, it's like somebody slaps a cool name on it and the same long-term trend that me and 50 other like technical analysts have showed you over the last 5 months is all of a sudden cool. Do you think we run up on the 23rd or 24th? I don't know yet. We can run on either potentially. We're all anxious not to miss the boat. Yeah, I can tell. I actually just had hardwood floors in both places. Not a lot of carpet in the city because it gets nasty. He said up to 250 yesterday. We went up 1%. Genius. How would we go up to 250? But I still, even though we've had a few technical breakouts, I think they're mostly luck. I still think the majority of price action on GameStop is driven by market makers and active participant and short hedge fund exposure, um, not by large triangles. As much as I want the technical analysis to be accurate, it's accurate within a greater margin of error than it should be, because there's not enough sentiment driving the price. Like technical analysis is the idea is a measure of sentiment in the market. And since there's not a lot of sentiment, it's just being moved around by institutions, that should, I feel like that kind of covers its price action. That's the reason that the low side of the technical analysis, like the low trend and the supports, are so accurate, but the high end is not, because when FOMO picks up or volume comes in, you can't really predict the high end, and it's illiquid, and so even then, like, the runs are much stronger than they technically should be. You sell it and you buy another contract, Aship. Where can you track IV? I can't see it anywhere. There's some historical IV data. Thinkorswim has historical IV data, I think. There's some paid option services that have it. I have most of my shares DRS, but ever since we started DRSing in MOASS, it seems like the jumps aren't anywhere near as high. I'm not trying to spread FUD. I think it's not that the jumps aren't as high. I think it's just like the focus on DRS has slowed down the options chain. Like, we've had far less call volume than we normally do, and that reduces the amount of run we get, right? Because if there are fewer contracts bought, then they have less contracts to hedge. And since most of the price action is from hedging contracts and then the gamma exposure following that, DRS doesn't really affect that, but DRS does affect their hedging in those moments. That's why DRS plus options is so important, I think, because then they simultaneously have to hedge contracts with no available shares, and it realizes the multiplicative effect of registered shares, not only on FTDs, but on their ability to delta hedge with equities. And it fucks up their ability to locate, which means it's harder to create an operational short. If I had bought my hood puts with way more theta, I'd be rich right now. That's every call option anyone's ever bought. Theta's always good to have. Do you think the whole meme basket runs next week? Also, love the DD. It could, yeah. To the same extent, maybe not. So you sell your 26 options on the 24th? But yes. Well, I'll sell them at the peak, not just like I'm going to sell them on the 24th. I'll try to, sell them at their highest value between the time I finish buying them and the time the stock runs. But why further outdated contracts? I think I'll be priced out of them moving forward. I think they will go up and they will stay up for a long time. If we don't run next week at all, what would you hypothesize the reason might be? And when would be the next run cycle? December 22nd. If we don't run at all, just nothing happens all the way into the roll date? That seems highly unlikely. During forced liquidation, people expect tons of massive downward swing, which isn't likely, but what percent downswings on the way? I mean, I guess if we don't run, they got margin called and they just didn't buy anything and then they're fucked. Like their margin blew up because they didn't they didn't return to gamma neutral. That would be the best explanation. I guess that could happen, but that seems extreme. Your green screen has a glitch. Looks like you have a bad face tattoo. Yeah, I'm aware. It's not a glitch in my green screen. It's just a light filter. I should make it a little better. What would you consider high IV for GME? I don't know, above 100%. Just generally, IV below 100 is a good buy. Or in the past, it has been. Below 80 is awesome. What day is the roll date? 12/9. Or 12/10, sorry, 12/10. If they're margin called, then the price will go up sooner or later anyway. Yeah. If the 23rd runs, would you sell then or hold to the 24th? I'll try to sell at the peak. Put some foundation on. Do you wear a hoodie because you haven't turned the heat on? No, it's just chilly this morning. Okay, that's the 5th time I've been asked in 5 minutes where to track IV. You have to pay for it, Callum. So if they roll, we see price action because could these days be a sign they are gonna roll? This could indicate this consistent price action to the upside could indicate that they intend to roll. I'm not sure. I don't think either plays out well for them, but the shift between one or the other is important for us. If GME is added to the S&P 500 in the next rebalance, will it mess up the ETF thesis? It could change things. It's not going to be added. I don't think it's possible for GameStop to be added on the next rebalance. It wouldn't be the next rebalance. Well, yeah, but I don't think it's possible. GME doesn't meet the requirements, and then there's no way a stock as volatile as GME, with as low a liquidity as GME, is getting onto the S&P 500. Buy one option. It shows you IV on my broker anyway. Yes, buying shares is still very good. Buying shares is what makes all of this possible. It's the reason we can see these exposures play out. Otherwise, if there was liquidity, we wouldn't even see this happen. They would drive the price down. Dan Rod put their pickle in my jar for face tat removal or ice cream. Pick one. Ice cream. Thank you, Tanrod. I appreciate that. And if you look at the moments where we have the most liquidity, like this was the moment where we had the most liquidity on GameStop, and they drove the price into the ground. Yeah. So if liquidity opens up, they will drive the price into the ground. People sold here. Here's the thing: is everyone like goes on and on about being diamond hands, but there's a bystander effect that plays out there, right? I would say the vast majority of people are, but there are people that sell the peak. There are people that trade the stock. Like all of these people exist in the world and don't give a shit about our opinions or our MOASS or any of that. And so by us owning the float and continually buying in, we put the pressure on the downside. We keep the stock up. And the more we hold and the more we buy, the more we're able to support it holding these high price levels. Which means that when the exposure does play out, the price runs even harder. No. Yeah, I've thought about trying to make FTDs, but or not FAQs, but it just doesn't. I don't know. I don't have time. I've like thought about it before, and I think it's better for me just to answer people's questions because even though they do seem the same, they are sometimes nuanced. A few dollars to help you out with some heating oil. What's heating oil? Take care of yourself. Hope you feel better soon. Extremely grateful for all your hard work. Thank you. Thanks, man. Do you use oil for heating? How's that work? It's like, should I use hickory or cherry for smoking my Thanksgiving turkey? Hickory. Man, everybody's so afraid of them trying to like move out ahead of gamma exposure. It's funny as hell. For Feb options getting priced out, I'm hoping to make capital on November 26th. Is is this strap bending me over and eating high Feb cost? No, I don't think that using capital from weeklies to move into a larger position in February is a bad idea, if that's what you're asking, Smock Stocks. Or if that's not, rephrase your question so I can. Just use oil for heat before gas and electric. Off-road diesel fuel. Bro, you gotta get out of the city sometimes. Why? I have natural gas. I don't even pay for fucking heating in New York City. They just turn it on in the building. It's not my fucking problem. Assuming you were to put 200K into options, would you put 50K into weeklies? No, I'd put 20K into weeklies. At least on my current strategy. Here's some money for no reason, or potentially calf picks. Up to you. Love you, Papa Pickle. Thank you, Kitty Pickle. If you Google what is a small pickle called, gherkins come up. Do you think that is what RC meant when he said small wee wee? It's you? No. I'd be so honored there. I don't know what the fuck he was talking about, honestly. You can't control your own heating? You just have radiators. If they turn them on and then you can turn them off. Or you can turn them back on. Like all the buildings, most of the buildings in New York have steam heat. So they have a main furnace and then that heats steam that's pumped through radiators throughout the building. And by law, I think if it drops below 50 degrees, they have to turn it on. What do you think about buying debit spreads going into the weekend with the idea of buying back the short leg Monday morning to combat the weekend theta? I mean, debit spreads aren't terrible. Buy back the short leg Monday. Yeah, that could work. Since you have all the relevant dates identified, can it be a viable alternative strategy to just buy a few weeklies on those dates instead of dropping several thousand on Feb, i.e., Jan 28 each week? Yeah, but the idea is to drive the price action up in order to be able to exercise those Jan and Feb calls, right, Dr. Drake? That's likely what could cause MOASS, right? Is the exercising of those calls. If they're not delta hedging properly, which we suspect they're not, and their gamma exposure is high, then calls being exercised in mass forces them to go to the market and buy shares where none exist, sort of creating our own share recall or lender buyback, right? Like, if you have a call contract and you exercise, and the writer of that contract does not immediately provide 100 shares, so that contract is sold naked, and they do not immediately provide 100 shares, you create a forced buy. Is this the part of this everyone's been missing? This is why options present maybe not the way, but a way. Is because we can margin call them. Do you expect it to be closer to max payment by the end of tomorrow? Tomorrow's call is drinking that much cheaper. You're still buying? Yeah, I don't really care about like a few cents per, or like $50 per contract or whatever. It doesn't make that much difference. YOLO Bozo, thank you so much, man, for becoming a billionaire. I appreciate that. Hit me up on the Discord. I'll get you added to the country club as soon as the stream is over. Thanks for the support, man. I mean, if your options go into their expiration date significantly in the money, yeah, you can just exercise them. Even on WeBull, you can exercise. You can contact them and exercise your options in advance. What do you think about Astra's fractal theory? I'm not sure. I haven't seen it yet. I know it's based on the stuff that like Pone was designing. So I haven't heard back from him. Chicken tender daddy. I think everyone underestimates the power of a contract. It's literally showing up at Citadel with a shotgun in their face and taking 100 shares. Yeah, it is a legal and binding contract for 100 shares of the underlying. Captain Phillips or margin call meme for the DT. Well, not a lot, right? Because like you could buy a Feb. Nope. You can buy a February 18th right now. 220 for 3,500. You can buy a 300 for $1,800, right? So, and since we know that they're going to have to push the price up on their exposure dates, having that contract not only forces them to hedge that contract, however minimally they do actually hedge them, but then exercising that contract forces them to buy the rest of whatever they don't hedge, right? So honestly, not a lot. Like on an individual level. One sec. what did I miss? Ghost of Homer's Ghosts. Thank you for becoming a Cornishon, bro. I appreciate that.
Welcome to Cornishon. Cornishon. Cornishon.
I watched the Houston stream again last night, and the Discord was talking about exiting calls on Wednesday at the latest, but my understanding is you were saying that having them... Okay. So Feb 300 is 300. No, a Feb 300 is not 300 shares, it's 100 shares. One contract equals 100 shares. I greatly appreciate the start of the trilogy. Looking forward to book 2 and 3. I'm not a drug pusher by trade, but funds for Ambien or melatonin. Rest up, my friend. Thanks again, Garrick. Thank you, Yoda, man. I appreciate that, dude. Thank you so much. Probably secret buying shares of AMC on his phone. No. I'll cover what I think of, what I kind of predict. A roll or fail will look like. Correct me if I'm wrong, but the idea is to play weeklies so that we can keep buying Feb calls at the gains and they go deep in the money on the end of the Jan run we exercise. You nailed it, Pong. I think the idea is to initially buy as many. This is my plan. As many Jan and Feb calls at decent strikes as I can. And then whatever capital is left over, buy weeklies with, right? And then roll the weekly capital into the next expected price action, and then the rest of it out into February, right? And then as we approach the January window, you'll be rolling, the weekly capital into that. Plus you'll already have that position in January, right? And then I'll be moving all of that into Feb. So by doing this, I keep increasing my leverage, right? And that strategy of increasing leverage increases exposure, right? Who said 1 to 3K? 1 to 3K what, J-Stars? From current price action, is it leaning toward a roll if you had to guess? It looks like one, but I think the roll's not good for them. Options are bad. We know they don't hedge, but exercising forces them to. EJS. Exercising options forces them to, I mean, they do hedge to some degree, right? Because they can't internalize 100% of the calls they write. What am I clipping? Okay. I mean, they would just blow up their own margin at that point. What kind of November strikes are you thinking about? Don't know until Friday. Yeah, don't know yet. Within a range from, at the money to out of the money. I don't have any intention of buying in the money calls, right? I expect the price to go up. I'm confident that in a January or February call, anything I buy at the money will definitely go in the money. My February calls are currently at 300 and 350. I plan to buy further strikes at 400, 450, and 500. My January calls start at 220. They're 250. I don't have anything else up to 300, and then they stop. My weeklies will obviously be from at the money to out of the money. I'll decide on that, like wherever that is at the time. I mean, these are already up, my 220s, pretty significantly. My 250s are up. My 300s in Feb and 350s are up from when I bought them. But I'm going to do the weeklies. I think I'm going to do some of the weeklies in WeBull. So people have a better idea of like what's going on, or I have some evidence of that that movement and profitability. What's your source for ETF FTDs? The SEC FTD data. Noodle Soul. Are you talking about the chart? That's just something one of the quants made in order to track the GME FTD and ETF FTDs as the reports are released. So it just scrubs the data from the reports and charts it. Ugh. Are weekly premiums lost if they roll or FTD, but we'll know before they roll. And if they FTD, we know they'll cover T plus 35 and plus 6. Yeah, essentially. It's T plus 35 through T plus... that varies, because the T plus 9 window, so they have T plus 3 to the fails created, T plus 35 calendar days to satisfy the fail, and then T plus 6 to or T plus 6 to locate, T plus 3 after the fail, and then T plus 34 technically in that order. But the T plus 3 and T plus 6 are trading days. The T plus 35 is calendar days. I think this is where a lot of this has gotten mixed up in the past. Is that it's, first of all, counting those days on charts doesn't work the way you think it would, because the charts, when you draw a box to count days, it uses, it starts at day 0. So you have to subtract that day. Like just charting the FTDs alone is kind of a skill set you have to learn. But once you've got it, it's very simple. But yeah, if they fail, then we know that they're going to get FTDs. And so all that does is move the price action into that FTD window, as opposed to that price action occurring during the rollover window. How do you explain the overall decrease in short interest of the stock as reported by NYSE? I believe Ortex sources their data from them. I don't know where Ortex sources their data from, but it's wildly inaccurate. Very frequently, the short interest was likely packed into long-term derivatives to obfuscate the position. And so the reported position is, what they are required to report by Reg Show. But Citadel isn't required to report things like futures contracts or options position or a lot of their activity as an authorized participant. They have quite a few exemptions from reg show reporting as far as the derivatives markets go. I have no idea what kind of volume to expect. There's very low liquidity, so the volume could be minimal. It could be very low volume on but very high price movement. When you exercise before expiry, does it force them to buy immediately or in T+2 from expiry? Immediately. They have T+2 to satisfy that contract and deliver you your shares. Most brokerages, your contract will be satisfied immediately, but they have up to T+2 to deliver them. If they do not, a buy is forced. The titles of the clips can be vague. I guess I could try if I can remember. Sometimes I'm just told to clip things. I don't even remember the question I was asked initially that started the whole speech. It depends on the rate of theta decay. Aggro Crag. You have to calculate it. And that'll depend on whatever option you're looking at expires. Theta decay is a constant. It's not like it doesn't work the way I think you're thinking it works. I don't like December 31st options. I think the liquidity in them will remain low. They're too close to leap dates. Leaps will end up being the preferred contracts. And there's no like expected run in that window where they expire. So I don't think we'll see a lot of OI exist in December 31st. I do realize they're cheaper. Also, they don't cover the initial FTD dates if they fail. And then if you're just using them to cover the roll, December 17th are better at that. Like if you just want to have options for a possible roll of the futures, then December 17th are better because the futures will be done rolling like T plus I think it's like 6 days. No, what is it? The 10th? How many trading days? Hold on, let me look. Nine days. So 7 trading days before the 17th options expire. Oh wait, no. That's wrong. It's 6, isn't it? 5? 5 days. So yeah, it's 5 days from the finalization of the roll until the expiration. So if they roll these December 17th are far better than having December 31st, right? Because then you're just paying for this and you don't need it. On the other hand, you have a much larger audience. I don't care. As of typing this, would you find a 212.50 November 26 call option as near the money or out of the money? I mean, technically that's defined by its delta, right? So a delta higher than 0.5 or at 0.5 is considered at the money. So even a 215 right now is considered at the money. A delta below 0.5 is considered out of the money. And then a delta above 0.5 is considered in the money. So like a delta of 0.6 is in the money. What's the difference between sell and close? One is writing a contract. The other is closing a position. Bear power. What do you do if you have the capital to buy contracts, but not to exercise them? How does that work? Explain like I'm dumber than 5. Let me think. If you have the money to buy contracts, right, and then they go in the money, the value of the contract goes up. So say you can afford 5 contracts, right? And the value of those contracts goes up, maybe we should use 3. You can afford 3 contracts. And the value of those contracts goes up 66%. You should be able to sell 2 of those contracts and exercise the 3rd. Right? If you have 2 contracts and the value goes up, not 660%. If the value goes up 1,000%, you should be able to sell 2 contracts and sell 1 and exercise 1, right? Like it should be directly inverse. So you can sell contracts to exercise other contracts. If we expect to roll, do we abandon the weekly play and just continue with Feb and possibly December 24th? You're talking about options for Friday, December 24th? Is that a Friday? Yeah. So yeah, you would just be playing the ETF exposure dates. So far more volatility occurs if they fail to roll. The price action is much more predictable if they just roll. Can you look at SIGA? January 10 calls are only 85. I'm ready for the NWO smallpox release in December. Thanks. Do people still get smallpox? I thought smallpox was like eradicated. SIGA Tech. What do they do? Fucking pharma. I don't like bio stocks. You tend to have to hold them for a long time. It looks good. I mean, it's at a new high. So I don't really know what to tell you. Has it ever been valued higher than that? No. I don't really know enough about, like, at this point you really need a fundamental analysis of the company to determine a new valuation for it. As it kind of climbs out of this accumulation period, and it's realizing new highs. You can just follow the price action on it. It looks a bit chasey if your intention is to buy in now. But if you think it will realize greater value in the future than it's currently at, and you have a price target. I don't know enough about the company to give you any more information on that. Once something's achieved a new high, that's usually where I'm done investing. All right, like I'll follow the trend as long as it lasts, but am I the only one that can't see IV for Feb options at WeBull? No, none of us can. So the broker adds the quantity of shares to your account immediately when you exercise, but the broker, go out and kneecaps them within 2 days if they don't provide the shares. Yes, essentially. They have, the broker themselves also have time in order to provide you with the shares. They have T+2, but the whole settlement period is T+2, and then those shares must be provided. I can't see the number of dislikes. Check the DMs and tell me you're proud. I'm probably not. What have you done? This may be the best play you've ever made, Moonwind. Congratulations. I just bought 222 220C times 5 to go with my 07 22 and the money leaps. Let's go. Awesome, dude. Yeah, so you can purchase a single like Feb 500. And if these cycles start playing out the way we expect, right? And these predictions start coming true, you can sell these at the peak and average them down, right? When the price drops. So if we peak on the 24th and then come down, so you can sell it here, buy back in here lower, and either increase your leverage at that strike or lower your strike. Right, you can take those profits and keep rolling them back into those February calls, and either increasing your leverage or lowering your strike, or both. Increase your leverage and lower your strike. Like if we get like a nice tasty dip off this 24th run into the expiration, right? You could sell here for, plus 500%. And then down here, you could buy back into, like 350s, but you might be able to afford like 2 of them, right? It requires skill and trading, but the potential's there to be able to do that. You can also just sit on it. There's a lot of flexibility with what you can do, obviously. You didn't say no, so I sent you that meme via DM. Oh, what was it? Look at me. I'm Martian. That's beautiful. I'm just going to put that right on the stream. Gorgeous. Thank you, Fluffiosa. The beauty of this is you kind of make the market maker your bitch, right? We own the float. And then by buying calls and exercising them, we're then telling the market maker, you have to buy 100 calls from us. Right? Does everyone get that? Because we own the float. So there's no one to buy those 100 shares from but us. So by exercising calls, you're forcing them to buy our shares. This is what everyone wanted, right? This was the dream, was that they would buy our shares. They would need to buy our shares. And we're not selling shit. So they're fucked. They're fucked from both sides. Clip it. All right. Kind of like a hedgy spit wrist, yeah. Do you think it's better to buy 50% weeklies or 11.26 on end of day Friday and 50% Monday rather than sell them all Monday, Tuesday? Do you think it's better to buy 50% weeklies end of day Friday and 50? Yeah, I'm buying my options on the 19th, the 22nd, and the 23rd, all 3 days. So yes, I do think that. Clip the entire stream. I'm doing this on like 3 hours of sleep, so I'm pretty impressed with my bullishness. Usually I'm too tired to be this bullish on 3 hours of sleep. I need my 4. When are you looking to buy the Feb 18 calls? I'm going to be buying some now, and then throughout the cycle, at any opportunity to average down, I will. Doom guy. Almost 14K subs. You hit 13K a few days ago. That's crazy. Do folks like hedgeroni on their pizza? Yes, Eiffel Tower. What's the Tostito of tragedy? I'm pretty sure that meme, or even just you saying that line in your DD. What's a thought? Are you buying any puts to hedge? Currently, no. Earnings, maybe, like I did last time. I mean, theoretically speaking, it doesn't matter which way the exposure goes, it fucks them, right? Anything that deviates from neutral. With limited funds, would it be far better for 1126Cs or the Feb strategy you just discussed and try to sell roll down? One is far less risky than the other. So Charlie H, thank you for being a diner, man. The February, like averaging down Februaries and increasing margin on long dated, like, or increasing leverage and decreasing strike on far dated calls, like trying to improve your strike while increasing your leverage, is slower, but the risk is far less. Whereas, dumping money into weekly YOLOs obviously presents a great deal of risk, but also a great deal of potential upside. So you can make greater profits on weeklies, but your capital is far safer in far dated calls. It's just a pure risk versus reward situation. Thanks, Rafi. I don't think there's that many shills. There's a few that really hate me, but I don't care about. I'm not gonna like spend my time worrying about them too much. Will you post that I told you so, DD, once the cycle starts printing? I mean, I think the biggest difference is if I'm right and all of this plays out as expected, is that the people that thought I was right from the get-go um, will just have a better price to buy in at, right? That's like the only thing that really changes. And that's no different than GME the entire time. Some people have better positions than others, but everyone's got a position. Like there's people that bought last year. There's people that bought at the peak in January. There's people that bought on the dip in March. There's people that bought on the peak in June. And it all averages out if we MOASS, right? It doesn't fucking matter when you bought in. And so, if options are a little more expensive and people want to wait for the proof, that's worth it for some people, I mean, I feel like depending on when you bought the me calls for 1217, that you should already be out of them. It looks like it's coming back down. Possibly a bounce here. This is what we were waiting for, is like this low buy-in in order to catch the upside. But, the whole thing on me was selling those 1217s at these tests and buying them back in on these drops. It was just a money maker. It was nothing like super, like we didn't expect it to go to the moon or anything, it's possible that on this next bounce, we could see a break of, 1350. It's got a cup and handle. It's solid. Provided it plays out. Oh shit, I haven't updated Reddit for hours. Fuck me. happened? Oh, that was weird. Bum, bum, bum. Lenixis is targeting 1123 for the quarterly roll, but it seems like you're looking at 1124. Are you targeting the same catalyst or something different? He thinks the cycle is driven by the SLD dates, and that could have an effect as well. So it's not that we're looking at different catalysts. I think both of our catalysts hold validity. I think there's more catalysts than he does, but I'm targeting 1124 simply because it's the last day of T+2. 22, 23rd. So they can cover all the way up until the morning of 1124. The T+2 day for me as well as him is the 23rd. So this is the T+2 day. The only difference is that they can cover into 1124. So they don't have to complete covering on the 23rd. As we saw, did August run on one of them? We've run on a Wednesday before. Not August, was it May? Yeah, so in May we saw the majority of the covering on the 26th, but the T+2 day was the 25th. I believe the same thing occurred here. The T+2 day was the 23rd in February, but we saw a massive amount of covering come in on the 24th and the 25th. That had to do with the ramp that was in place at the time. Call interest was extremely high, but so as long as those orders are placed by market open on the 24th, they are considered to be within T+2, right? So I don't know why Lenixis is like hell bent on the 23rd, because he should know that they have. But I think his driver is that SLD, like the SLD cycle. But I think even that could play out, on the morning of the 24th. But it's more likely that it's not one single thing that drives the price movement, right? Which is what we've found throughout this cycle. It's where those things overlap that we see the greatest movement in price. When they have the most exposure. And no day in all of the year do they have more exposure than they do on January 25th. 26th, 25th. Feb was a Wednesday. So we going to 250 on Wednesday? That's my conservative price target. Yeah. 225 to 250 is the range I'm looking for us to run. But illiquidity and the wide bid ask spread mean that we could run far harder. Would you expect a dip after they cover on the 24th? Not right away. The massive amount of upward price movement creates more hedging issues, and obviously, if we go up enough, there's going to be a lot of exercising, right? And so that creates more exposure into that Friday and into the next week. So I think we will go up hard on the 24th. and then we will go up and chop and go up and drop and all the way out until December 1st. The price action will remain volatile and high, but I think the peak of that volatility will be seen on the 23rd and 24th. Because all those weeklies that everyone's FOMOing into and all those ETF monthlies and all of that, that's all getting driven up, right? Which is creating more exposure. So once we go up hard on that initial exposure, then the exposure from that run has to play out. So I don't think we'll see a rug pull or a drop in price until a few days later. Like we could see the price drop from its high, but I think we'll continue to bounce around for several days. Shorty's prepping, could be big drops on the SPY, big drops in crypto. They could be getting capital ready to cover their exposure. It's possible. It's correlated, but that doesn't necessarily prove anything. I don't know if there's a lot to take from that. If there is, it's not something I want to dig into. What's your percentage of confidence to the next week option play? Well, it's something that's happened 5 out of 5 times in the past. And so that means that I am more confident in it than I've ever been in any options play I've ever been in. Does that mean I'm 100% confident in it? Absolutely not. But my level of confidence is very high. If I look at it purely from, a trading perspective, it's not a sure thing, but it's damn close. If they could have broken the cycle or game theoried us, they would have done that, before August. Possible for Nvidia to hit 400? Why not? No, I don't like that, C-Mill, because so we run here, right? And then we have the price action, chopping around for a couple days, and then we run again from the gamma exposure, right? But during that price action chop, we're probably not going to stay at the peak, right? We're probably going to drop down and then chop and then run and then drop. So depending on the price action, buying December 3rds, you could end up just buying them on high IV and not really realize a lot of upside from this exposure. This exposure will present some upside, but not necessarily a lot. If you go back to August and look, I believe it was the peak. Here is where that exposure played out. So near the money calls would have been fine, but the IV was significantly lower here than it was on this day. Right? So even though the price went up, our IV was much lower. And then you would have gotten, if you'd held them, you would have gotten burned immediately. So yeah, you could play it, but you definitely want to be nearer the money with lower IV if possible, or in the money. I would just play the movement, and they're hard, they're quick. That one on that Wednesday, I remember it well. We were up for 10, 20 seconds at that peak that you see there on that wick. And then the price tanked hard. What is typically the savings on Theta to be gained between Friday afternoon and Monday morning? It's usually 1 tick. It depends on if it's a weekly or not. On a weekly, it's usually about a tick. 5 out of 6 is 83.3%. So more than that. No, just about that. That sounds about right. I mean, if it doesn't happen, I'll just cut my losses and move on, right? Like I'm not putting any money into weeklies that I don't expect to lose or I can't afford to lose. Can one become a double billionaire to flex on the rest of the billionaires, but still be humble in the eyes of pigeon whales? Do you want me to create a double billionaire? A DD, if you will? Interesting. For the humble. I've never thought about this. Dillion squared. It already exists. I was a triple billionaire until last month. Thank you, a user. I don't want to do YouTube things. I just flex with my icon. It's a sick icon. Do you guys like the icon, by the way? Now that you finally have the 6-month icon? For those OGs who've been here forever. Conservative approach. Do you finally feel like your status as an OG is recognized? So we should assume that the peak could only last a few minutes. Yeah. Would a conservative approach to be weeklies be exit half at a test of 225 and sell the rest based on technical indicators? I think the like exit strategy I defined in the guide to MOASS is a great way to also exit this, right? Except you wouldn't ride the downside, you would accelerate your exit as, you know, price action drops off. I hate my icon. What about OG lurkers? Well, Palma, I do remember you. You're also recognized. Oh no, I've been here forever. I just didn't pay for it. I know. Don't worry. It's just fucking around. It's not a big deal. How many Moonwinds are writing CC? Moonwind's been here since like day 3, and he's got like the pickle jar icon. So Charlie's Vids is the gherk for paranoid schizophrenics who don't understand market mechanics as well. Don't forget that part. OG lurkers didn't help pay his electric bill when he was defaulting. Being the lucrative trader you are, what possesses you to get your masters? I'm still not sure on it. I don't know. I like the idea of learning more. Getting into aspects of the market that I think like in ways GameStop has made me want to get more into that and understand those market mechanics better. But in other ways, it also makes me kind of not want to do it anymore because I don't want to take the time. I know you do, man. I think that's the same decision anybody pursuing like an advanced degree is faced with. Like
do you just continue doing what you're doing? Or do you, get that degree in order to, you know, do better in your field or advance yourself in the future? There's definitely an opportunity cost. Thank you for all you have done for us and me personally. I don't think my research and personal DD habits would be present without your little push. Moon soon. Thanks, cool daddy. You'll probably be able to just submit your DD trilogy and they'll give you a degree. I don't think so. I hope this man get a perm. Yeah, it's more proof of knowledge, right? Than anything else. It's just like validation of what you know. Quick announcement: my Pigeon Whale membership and all my donations have been paid for exclusively from profits from Pickles picks. Become a billionaire today. Thank you for advertising membership, Carl. I appreciate that, and I'm glad you made some dough, bro. Paul Ball, dude, thank you so much for becoming a Long Johnson. You didn't have to do that, man. Let me get you added. Oh no, you don't need to be added. You're good. But I do need to play you the song, which apparently needs more slide whistle, or so I've heard. Visceral. I'm currently trying to paper hand my MD over here for the next few months. Hard to believe there's a real return on investment for you based on your evident level of understanding and profitability currently. Yeah, there probably isn't, but I like school. Like, I've always liked school. I don't know. I'm always intrigued by the unknown. Like, I don't if there's a mystery, I want to learn more about it and understand it. And I think that's what makes it tough for me, is because like I want that. I want to know those things. I want to learn more. I want to research it. But it's difficult on the other side because the cost of the time it would take me to do it could hurt me financially. So especially like long term, as I'm now old, as of tomorrow. Today is my last day being young. Would it be possible to change the white text on yellow background to something else? It's tough to see for us. I'm referencing the yellow charted dates. In what, Mustard Homie? Can you be more specific? Which white text on the yellow background? You hold your Jan Feb calls for Jan Rip? I mean, if we rip hard in January, I'm just going to exercise the Jan calls, right? If we hit, 480 or 500 or 600 by January 15th, 16th, like we did last year, I'm just going to exercise all that shit. Yesterday and today seemed like someone's trying to keep us around 210. I need to focus on the current price action. I mean, we keep staying at 210. Yeah, if they go in the money next week, I'll sell them. I mean, for those to go in the money solidly next week, that's like 300s. And most of my calls are further out for those dates, right? I have a few near the money. So right now, I'm trying to remember what I bought. I have 225 or 220, 250, 300, and 350 for January. If these are significantly in the money, our price action is far greater than expected, right? So I would probably hold them because clearly we're going to the moon. Like I can't see selling them. And I think I have 4, 6, 10, and 15 for this is January right now. I wanted 10, 15, and 15 for that date. But yeah, I don't know. I feel like if we cross 300, that changes a lot of the upward potential. Like I definitely wouldn't be trying to sell those on the peak, right? I would be looking for like if the roll occurs. I mean, if we had with our current price and if they roll, there's a potential that we could hit numbers that cause margin calls at the roll date. Like it's possible that our floor is high enough and we are illiquid enough currently that, MOASS could start much earlier in this cycle, right? That's not out of the realm of possibility for like we don't have to wait until January for it to happen. Zool, dude, thank you so much for coming to Pigeon Well. Whose song did I miss? You mad, bro? Sorry, did I miss a membership? I don't have it in the chat. Dude, what did you become? I can't tell. But if you tell me, I'll catch up on that. Zool, thank you so much for coming to Pigeon Well, man. I appreciate that. Hit me up on the Discord and I will get you added to the Pigeon Whale Royal Society. Other Pigeon Whales, flock to your newest member. Praise be to you, sir, and praise be to VWAP. Oh, the yellow lines for your future states? Oh, sorry. Yeah, I can change that. I just use that because they're not... Like, I feel like colorblind people can see them. Is that better? I can't change the text color. I could try white. Maybe white's easier to read.
Cover calls like Lumen, cause that's fucking rough. Once a day comes when GameStop finally leaves the stratosphere. We'll all be pigeon whales on Girk's yacht. Hey, will you let me steer? Hey, seriously, guys, not a cult. Not a cult.
35 tomorrow. Fun fact, if in the American healthcare system, it's cheaper to enroll as a part-time student for health insurance than it is to have private insurance. Interesting. I mean, there's also tax advantages to being a part-time student. And you can defer your student loans indefinitely. Man, I told you that gift was in there. Remember my Discord DM video? I hear the passion for it. Thanks, Hartley. I do. I watched your. I saw the things you sent me. You should have opened one of those garage doors though. It looked really hot. It was hot in there. It was getting steamy. MaxPay website shows a crazy 19,769 contracts at $800 strike. Is that all for the same date? It could be. And your key date's the yellow line. Oh no, probably not. If it's just showing like on the Max Payne chart, that's probably not all for the same date. Unless there are. But a lot of those far out of the money contracts are the volatility hedge. 17th, we could look at this. 759. January, I'd imagine, is where they explode. I mean, there's 35,000 open January 950 Cs currently. December doesn't even have that. What does November have? 510 is the max. Does June have 800s? I'm guessing that's the 800s from all the available dates. But I'm not sure. See how nice and wide they keep our options chain so that they can hedge their volatility. Like no other stock even with the IV GameStop has this many fucking no other $16 billion company has like this wide of a fucking order book for their options or options chain. Like, it's fucking ridiculous that we have calls that are $500 out of the money. What's your estimate target for end of covering next week? It'll either happen on the 23rd or the 24th. Early on the 24th. Or anytime on the 23rd. No, I got the pigeon whale. Swaps and hedging volatility, since the replicating portfolios require close strikes with calls, puts weighted differently. Does this work as a way to forecast price movements? EX November 26 has a high concentration of strikes between 185 to 40 with higher OI on these strikes. It could be. I don't think we've yet determined how good of a predictor the volatility hedging is of those replicating portfolios, Ofnir. But it may be. It is something that I think is being looked at closely. Me just broke below 10. You're old enough to be president now. Did you like my birthday present? What was it? Ofnir, thank you for the membership, by the way, man. I appreciate that. Owner of 1 Jan 950C. Nice. You and 35,000 other people. How do you feel about looking at odd strikes with less OI to get better deals on premium? As long as they're on a relevant date, then that should be fine. Like if you're expecting a run that week, the options chain will fill in. You'll get the liquidity you need in those contracts. But if you have like a week, this is why I don't like the December 31sts, because they're not really on a week where there's an expected run. They're kind of in between runs. Right. So I don't like, even if there is a run, I don't expect liquidity to significantly pick up there. And that's why you're always safer with like weekly of the week, monthlies, quarterlies, leaps. Because those will always see improvement in liquidity during a run. Whereas like off weeklies, like far dated, may not. They write those calls because we buy them. They write those calls because they have to. They need them to hedge. If they narrow that, right, and they can no longer effectively hedge, because they can hedge that delta, they can hedge it with calls as well as equity, right? But if they don't write that wide order options chain, then they don't have enough room, right? If the price runs out of the chain, they can't hedge out ahead of it anymore. Rip Sponger7, who my dad said had a terrible username. Thank you, Daddy's Little Nut Meat. Interested in the option strategy you discussed when you streamed with Houston. Where can I go to look more into it? It was hyperbolic, right? Yes, you could potentially, if you nail every dip and every peak right on the button, you could potentially turn $500, and everything plays out exactly the way as we expect, or I expect. So every cycle date lines up perfectly. Every options buy is perfectly timed. Every option sell is perfectly timed. Then yeah, the potential to make $5 million off $500 is there. And I do not think anybody is going to accomplish that, because you have to 10x your options 5 times. And if they roll, the opportunity doesn't even present itself to do that. Matt, thank you so much for becoming a Dillionaire, dude. I appreciate that. Hit me up on the Discord. I'll get you added to the country club as soon as the stream's over, man. Me below 10. It's still got some room to move. See, I know a lot of you are asking about this, and this isn't bad for options, right? Like, it sucks that for options, it sucks that we've stayed at 210, but it's fine, right? Because that means it's good for the run. So that means more exposure on the run, even though we're priced out of like 200s. But that means all those 200s are now in the money, which means they're exposed to them. Additionally, we're just trading flat on 210, right? So theta in contracts that anybody plans on buying is just dropping. IV is not picking up significantly. This is not bad for, buying options later. GME price action over the last few days showing negative concavity. I think downward price action is likely tomorrow and possibly Monday. That is ideal for them to drop the price tomorrow. It puts more in the money contracts out of the money. I thought they would have put a little more pressure on dropping the price today, but it's still pretty early. Additionally, if they can drop it Monday, they can get people to paper hand out of options, reducing a potential gamma ramp moving into the 24th. So moving into their exposure, the more they can drop the price, you know, people who bought in like all in on Friday for next week are going to get scared. They're going to sell, right? And then they can run the price. December 3rd, sell cash secured puts. I don't love it, but it's probably okay. Risky, because we don't know how hard they're going to drop it on the downside of that exposure. If they don't roll Mr. Tyranniac, they might slam it. I think those November 26s are going to be much cheaper next week. Bang, bang, Chuck. But I would probably be slightly out of the money. That's up to you, though, man. You got to determine. I mean, you could afford a February call with that same amount of capital and have a much safer position. Going for 240, 250, because if we run next week, the IV spike will cause those contracts to print more than the 210, 225s. Yeah, that's true. So will the change in Delta. GameStop is doing their first midnight release of a game tonight. Pokemon since COVID. Bullish and jacked. That's dope. Thanks, bro. The membership is well worth the education I've received from your stream. Thanks, man. I appreciate that. Thanks a lot. That's something I may have to revisit a bit in my strategy and pay more attention to. Okay. Challenge accepted. Taryn, dude, thank you so much for being a pigeon whale, man. Super important question. Do you have a particular price target associated with the deployment of Pickle Rocket? I have a particular event that I am saving the Pickle Rocket for, Taryn. Would you roll any of these cat all down 60, 70%? 12.3 for 210, 12.10 to 215, 12.23, 220. I have 210s that I think are starting to slip out of the money. I rolled my 220s out to January already. The 210s I'm probably going to roll. If we go below 200, I'm going to start buying, or if cat goes below 200, I'm going to start buying 200s again. Probably also for January. I just haven't decided if I'm going to roll the 210s or not. I bought them on like a pretty steep dip, so they're not red just yet, but they're close. Why would you say that? You know all these DJs are going to take it as a challenge. Say what? Oh. Well, I mean, if the challenge is to YOLO $500 into 5 million, that's a far better challenge than people just dumping their life savings and a second mortgage into fucking weekly calls, right? So if they're going to act like fucking degenerates, at least they're only doing it with $500. I want to do that on here, but I also want to deploy more capital on this account. Barely heard the last two songs. Something wrong? I had them turned down a little bit yesterday because we had so many members coming in that I needed to talk over the music. So I just turned it back up. If you had 10K and no options yet, what percent split would you put into November, Feb expiries? I mean, I'm splitting my capital 1090. So 10% is going into November, 30% or 40% into January, 50% into February. Are you buying December 23rd in case they roll? I may put some capital there, but right now I don't have any plans to. I still don't think the roll is advantageous. So if they do, I'll be a little surprised, I guess. I mean, technically roll or fail is 50-50. We don't know which, it's a coin flip. We have no idea which way they're going to go. I don't know what hurts them more. I would assume the FTDs are worse for them long term. But in the near term, driving the price up into the roll date seems very dangerous with that following exposure in December. So, and also based on the fact that they failed to roll last January, I do think that the fail is more likely. As always, I expect them to push the maximum amount of risk to the furthest date possible, right? And so I think they will likely fail. I think they will want to not expend the capital up front that they can hold out for another month to spend. Anytime they can kick the can, I think that's their advantageous choice. And not rolling presents an opportunity to kick the can. By rolling, they really put themselves at a high degree of risk, especially given our current price point. That kind of volume could kickstart a short squeeze on its own. So yeah, I expect to fail. Good to know. Thank you. I'll stop bothering you about it now. You got it, man. But that's my own thing. You can try to play the role if you want to play the other side of that coin. I just think one side of that coin's weighted a little more heavily than the other based on the way they've behaved. What's the origin of pigeon whale and how does one become one? Okay, so someone told me to make a whale call because like whales were buying the stock and the stock was running up, and I cooed like a pigeon instead, and the pigeon whale was thus born. If you want to be a pigeon whale, there's a link in the description that can allow you to do that, but it's not necessary. As always, guys, like I make plenty of money on stocks. Like and a subscribe is more than enough support. If you just want to lord it over the pores, go nuts. What'd you go to school for? Math and finance, financial mathematics, minor, bio minor, and a degree in finance. I was very undecided for a long time. I wanted to be a doctor, but I didn't want to spend, 10 years becoming one. Being way more risky with my YOLO, 33% into weekly, 66% into longs, but it's money that I'm 100% prepared to lose. I thought you were just buying 950Cs, Popcorn Trader. What happened? Do you think we'll run on the 23rd or 24th? I don't know, Bastion. That's up to them, right? They can either one, both. I bet you I can do the opposite better. You give me 5 million and I'll turn it into 500 real quick. One hitch is that the 505 million crosses a tax year boundary. You need to hold back a bunch of capital at the end of the year. I mean, you'll have $5 million. Use that to pay your taxes. Or defer your taxes until the latest possible date. I don't know. I'm not a fucking accountant. Talk to an accountant. I don't think you need to hold back a lot of capital, though. I think you'll have the capital, right? You're selling contracts. If you lose it all, then you don't know the government shit. Viewappopotamus put their pickle in my jar. I'm sorry to hear about your inability to purchase some more heating oil and that you may freeze this winter. I hope this helps. Thank you, Viewappopotamus. Still great name. Good morning, Trash Dan. Are you buying Feb options starting at the money or a bit higher? Higher. They're out of the. All the Feb options I'm buying right now are out of the money. I'm probably going to buy some 250s, and that's about as low as I'm going to go. If I get an opportunity and we're below 225, nearer to February, I'll consider lowering my baseline strike, but right now, 250. I have two 220s. Sorry, not 225s. I have 220s for January already. No, if they roll, it doesn't drop. That's the risk, Daniel Godfrey, of selling CCs at the peak on 1124 or 1123, is that if they roll, the price keeps going up. Yeah. $30K short candle, and they can't even bring the price stock down $1. I mean, I think if we look at it, the regular candles, it just filled a gap to the downside, like a small gap. Maybe here. Did we have another one of these at some point? Oh, this. We probably filled this gap. Like this, like small, or tried to fill it. Oh, it just disappeared. Okay. And there it's back. It just didn't update. Pigeon wheels are exempt from all state and federal taxes. This is one of the benefits you don't promote enough. That's not true at all. Right. Play and waste that capital spent on rolling it last time. Am I correct in this understanding? If they roll, they move the long-term hedge play forward. If they fail, they exit that futures play and waste that capital spent on rolling it last time. It appears to be that way. we still don't know. Like, we found some evidence of we found a very compelling amount of evidence of the variance swaps. We've found some futures contracts, like equity futures contracts on GameStop, but we don't know the quantity of them that are held. But yeah, it's possible that by failing the contract, it completely wastes all the capital that they spent on rolling it in the first place. Or the position size is so large that they can't write it for a further date, so they have to do it every quarter. That's another possibility as well. And the losses, like, if they wrote them out like a year, they'd have no counterparty, or they wouldn't be able to sustain being the counterparty. As an MD who loves the majority of the parts of his job, I can say it's mostly rewarding, but the past 2 years has been pretty rough. Would look for jobs that are 2 days a week after MOASS, probably. Yeah, I could see it being tough in the last couple of years. What problem do you think taking a huge number of verticals next week may bring? Will liquidity be enough to enter those cheap positions, 200 to 400 contracts? It could be. I don't hate it. It's just a hard YOLO, right? Like, you're talking about buying way out of the money calls, and shitloads of them. So maximizing leverage and risk. It's not a play I'm fond of, as GameStop is still manipulated highly, right? Like, they still retain the ability to drop the price. And the higher the price is, the more liquidity is generated, the easier it is for them to fuck with the fluctuations in it. So you've got to be prepared to exit those like that kind of position very, very rapidly. Because it can go from being very profitable to worth nothing in minutes. Seconds. We'll get a 3,000 tax loss harvest a year, I thought. I mean, you don't pay taxes on capital that you don't make. You can write off losses in addition to that. Brittany put their pickle in my jar. Brittany, stop eating my hot dog. What? Who the fuck is Brittany? Is this? I'm out of the loop on this one. Do you know what strike Moonwind is selling cover calls? I'm finna execute that strike and get him assigned. You only get 3,000. Sorry. Matthew. I was just trying to read Matthew's. Matthew Lombardi. We should see any dramatic movement until next week. Correct. I don't expect anything. Would you recommend buying Feb calls and then holding them until they're worthless so we can get big karma on Reddit talking about how much money we lost? I mean, what that guy was saying was like essentially that he had contracts that were deep in the money repeatedly and didn't sell them. So, he was just greedy. I understand, like, every time we ran, everyone was like, this is it. This is MOASS. But at the same time, like, if you're a professional options trader, you're taking some fucking profits. You're not just riding your options till they die. $250Cs are a $35 premium, super expensive. They're not cheap, but you don't need a lot, right? It's still $35 a share, Phil C. And, if the price goes to 500 and you exercise that contract, you then have 100 shares and you only spent $3,500 on them. Are you not? No, I expect the price to go up, Cass Sandy. So I don't expect the theta to factor. If the price goes up, that offsets the theta decay. Once they're in the money, theta decay is far, far slower. If you see them building another massive gamma ramp in December, will you bail out of your far out calls? No, why? You mean like on the 17th? If they start building a massive ramp on the 17th in order to try to force a fail? Is that what you're referring to? We don't even know if that's actually what happened. I mean, it's possible, but like there's no proof of that all those millions were just thrown away to force them to fail the futures rollover. It looked like it. I like the theory, but I also like the stock, and so that might just be like confirming bias. I don't know. I feel like I should be cautious of that. These dates are clearly important, but how can you be sure they're rolling or failing? 2 patterns from 5 data points seems assumptive. Is it referenced with other stocks? It is assumptive. Trash Dan, but it's what we got. It lines up. It additionally correlates with those dates, right? And then, the thesis is if they fail the futures, they get FTDs, and that also correlates. So it's not just the 5 data points, right? The proof is in the FTDs that occur when they fail versus when they roll. So there's other like circumstantial evidence that points to that being accurate as well. I mean, we're still trying to find proof in the negative space created by price action. Wasn't that the DJ Loki guy who was borderline harassing you on Reddit? Borderline is not the word for it. If we finish Max Payne this week, greater than Max Payne this week, does it change your plans? Ray buying calls next week? Nope. $220, $250, but you could be getting them for 10 cents instead of 50 or 150, which means you could get many multiples of leverage. Just wanted to double check. Oh, okay. Yeah, in a 220 to 250 range, I think that could be a very profitable strategy and sort of what I'm doing. I'm buying a few nearer the money just in case because I have been burned before. What do you think the most hilariously dumb thing one of us will do next week? Hold till options are worthless or buy calls at the peak? I can see both of those things happening. They'll be cheaper Monday. Sauce, that domain is owned by GameStop? What domain? In your podcast with Houston, you talked about buying in increments of 1, 2, 4, 8, 16. My questions are, what price increments are you using? $10 increments? And how high do you plan to go? I think I'm not buying anything past 300 for next week. The increments I choose will probably be based on available liquidity. Right now it looks like that's at 220, decently at 225 and 230, 250 and 300 is where the most liquidity is present currently. That can change. Yes, I'm at the longs forcing another fail. It's possible. I mean, if we see it again, that's a little more confirmation that that's what's going on. No problem, April. Thank you. I think the September fill was very likely retail failing to play options correctly. That was an awful lot of contracts for retail. It could have been. Don't get me wrong. Everyone was expecting the roll, right? Because we didn't know any different. If they're not building a ramp on the 9th, do you mean that means they expect to fail and don't need to force one? See, that's also possible, right? Like we just don't know the strategy employed there. It was weird that all of those calls were held open until expiration. But it could have also been, market makers buying long calls to hedge the delta on their in the money puts. Like there's too many possibilities for us to definitively say that one is true. I feel like it wasn't market makers because those calls kept getting rolled forward until that date and then they stopped. Like we saw that OI move forward over the weeks running into that, and they wouldn't have hedged in the money puts they hadn't bought yet that far in advance, right? To fill in the gamma ramp, I'm not really concerned with a gamma ramp right now. I don't think enough confidence in this date is there to see a significant gamma ramp. I think the psychology will be, once GME keeps going up. I think that's where we'll start to see a gamma ramp occur when people start to FOMO in. I misplayed a lot of contracts. I mean, I did too, because of the roll. Like the roll didn't occur. Looking at the options chain, they're a hedge against volatility. They're part of those replicating portfolios that Zinco talks about in his DD. Those massive OI and out of the money puts is needed to hedge volatility. What's the downside to playing Jan 950C for the next week instead of like 250C weeklies? It seems like the 950s print more with an IV bump, but holding them for a few days shouldn't be more risky. Those are fine too. I mean, IV is tricky. Like, obviously intrinsic value is a little safer, but there's a million ways to play next week. There's, you know, tons of different option strategies you can employ. And the more knowledgeable you are, the more various strategies you could find effectiveness in. But, you know, I'm not going to go into those because they're just needlessly complicated. And I would never have time, or I would never have the time to go into them in depth and explain them. If you look at November 26th option chain, the 237.50 here plus 10%, but the 230 are negative 10%. Why would that happen? That could be due to OI, implied volatility on the strike. There could be several reasons. There's arbitrage there that can be played. When we hit 344 in June, did they fail to roll? No. No, June they rolled. So March and June, we suspect that they rolled their futures contracts forward. In last September, January, and most recently in August, or well, September, we believe that they failed to roll those contracts. And it could be that the contracts that are rolled are, you know, semi-annual or annual. And it may be that, you know, March and February, or March and May. Well, no, June is the March and June represent contracts that are rolled. And, you know, September and January represent cycles that are not, or cycles where futures don't exist, right? We don't know that because we have no evidence. Well, we have no proof of their futures position or its expiration dates. Likely because those can be internalized and don't have to be reported. Additionally, because the CFTC removed reporting requirements for the next year. So in case anyone mixed it, IEX Exchange is now available for Android users on Fidelity. Rejoice. Rejoice. Awesome. Super cool. Asked, is crazy spoofed? Damn. Crazy ask is spoofed? Is it? I don't think so. I know you covered it before, but how are December 3rd and December 10th expiries possibly useful to us here? I don't like either one. Windmill. I like November. Here are the expirations that I like. I like the 11/26, 1/21, and 2/18. These are my favorite. I like in between that. I like the, I guess, well, I should separate these into short and long term. So short, long. I like 11/26s. I like 12/24s. I like what is it, February or Jan 28ths. And Feb 3rds. So these are the weeklies I'm looking at. And then for long-term positions, I like 12/17 a little bit, just in case they roll. And then I like 1/21 and 2/18. So these are the short-term ones that I like. These are the long-term ones I like. I should write term, so no one is confused by this diagram. I think those are the dates where I expect movement. Or these weeklies capture movement the best. And I think these long-term contracts also are best dated to capture broader windows of movement. And I will clip that. When buying to open a contract, what benefits are there to different order types, market, limit, stop? You can get them for cheaper if you use a limit sometimes. Christian. Or not Christian, sorry. Brian. No. Mighty Potato. If you guys want to ask me a question, tag me. Because I can't, they don't highlight and it's harder for me to see them in the chat. When are you buying weeklies, Friday or Monday? Both? And Tuesday? Are these dates going to be in the book 2-3 of the DD post? Yeah, they'll be included. Is the long going into 2023? You could. I mean, anything beyond February 18th is also acceptable. It poses additionally less risk. So those contracts will hold value longer. If you're buying January 23 leaps, obviously those contracts will continue to be valuable even if nothing happens. Like they won't lose a lot of value throughout the next couple months. Give me 1 second, guys. I'll be right back. I know you guys are always speculating on if it was or if it was not a plotkin. It was a plotkin. Also, mid plotkin, mattress delivery guys showed up. So sorry about that. I probably missed some calls. Yeah, I ate Mexican food in New York City last night. I don't recommend it to anybody. Everyone poops. There's a book about it. I'll cite it in the DD. Is there a Gmi NFT announcement next week? How would that affect your DD investing strategy? Thanks. I mean, I'll own options. So if they announce some fucking ridiculous NFT dividend, then the only potential is upside. Centrifugal farce, right? So the price goes up more. My January and Feb safe options bets are just driven deeply into the money. Clip. We plotted at the same time. Now we're bound for life. Earlier you said something about buying 3 contracts and selling 2 to exercise 1. Can you elaborate on this a little bit, math-wise? I think I missed some key information. I mean, the math was not calculated when I was elaborating on that. But if you have like a 300C and it's trading at $600, you know, you have a 100% increase in the intrinsic value of this contract, right? Which means if you own 2 300Cs, you can sell one, exercise the other. So you get 2 for 1 for 100 shares. You also will capture some profits as well. I like this strategy. It's my favorite for exercising options. Some brokers offer exercise and sell to cover. And in this instance, basically, the broker will exercise your call and then sell whatever shares are necessary to cover the price of that call or to cover the price of that exercise. Is book 4 of the DD? There's no book 4. Does your TT even address Lady VWAP? Kors would have to switch to mobile and taking us with him to help encourage the plotkin. Well, he needs the confirmation that he's doing the right thing. Can you explain the point in exercising contracts for Jimmy? Is it just to try and force a MOASS? No, what do you mean the point in exercising? Doesn't everybody want more shares, Monkey D. Floofy? It doesn't just try and force a MOASS. It demands a purchase of shares, right? It is a contractual obligation to be delivered 100 shares. And if we own the float, truly, there's nowhere to buy them from except us. Also, more shares. I don't know if Fidelity has cashless exercise. It seems to be obscured, or the right questions aren't being asked. I'm not really sure. I haven't called them myself. I don't even trade options with Fidelity, generally speaking. Either have a cash account or apply for margin. Have cash or apply. What? Do you think Ivy will cool down significantly between this next week and December dates that are spicy? Maybe not significantly, but it'll cool down. Does anybody know what Ivy bumped to on the last run? We could look at it. History. Hold on. I have oh, God damn it. So we could look at a mean implied volatility, or let's do like a 90-day moving average. For the current 11/24. Oh, it's just within a very 10-day. Let's see. In August, on the 24th, it's too smoothed out. Hold on. 180. Oh, historic volatility. There we go. 8/24, it hit 0.326. Is this a better way to look at it? $8.24. So 0.347? No. Hold on. I'm trying to figure out how this website works. Why did they do it that way? Here we go. Call volatility, 30-day window, 180-day window. Okay, so on 8/24, why does it not show me for the daily? Why does it have to keep smoothing it? Okay, this is garbage. Someone suggested I try this. It doesn't, it's not good. Anything that is allowed to get upvotes is FUD. What? Would it be better to wait for GME to get to 30,000? It may be that the exercising is what can take GME to 30,000, but yeah, of course, if we just launch to the moon, right? Then it's absolutely feasible that you can just sell one share and exercise one call. You can do it sooner. You know, you could do it at $600. You know, you can sell 50 shares to exercise 100, you know, at $1,200, 25. Or not $900. That's right. Oh no, I thought I was wrong. Anything that gets massive downvotes on SS is on the right track. Your options, DD. It hasn't gotten massive downvotes. I mean, like 10% downvoted, I think. But, you know, fuck those people. Shills. Yeah. That's the gist I get, Windmill. Fidelity does not have a cashless you can do yourself. You have to call them, and a trader will execute the sell and buy for you in one shot. There you go, guys. Generally, in my experience, when I've heard about people doing cashless exercise, I haven't done it myself. That's how it's gone. They've called the options desk at their brokerage and had them execute an exercise and sell to cover. IV jumped 30 from IV 30 jumped from 97 to 146. Okay, there you go. Thank you, Kyle. And what's it at currently? Do you have that up? What does the layer 2 order book tell you? Not a lot. I mean, you can I mostly got this for the time and sales, so we could see when dark pools were printing. But I mean, the order book kind of tells you the bid ask spread, which is useful. As it widens, volatility picks up. It can show you where they're placing sell walls and where likely resistances will fall. Yeah, no problem, Fudgeful. You say you pick strikes with high liquidity, but aren't these strikes the ones with the highest IV? So easier to get IV crushed then. I mean, you're only going to get IV crushed. You'll get crushed on IV in the nearer term calls. Things that are dated far out won't crush as hard. Like they'll hold their IV longer. The decay of it will be slower. Do you think people will replace the saying "watching paint dry" with "watching GME trade"? IV 30 is 70 right now, so there you go. It's like a very nice low. Yeah, yeah. It's IV 30 is IV of at the money options 30 days out. Thank you, Trash Dan, for the card. I currently have 800 in capital used towards options. In order to buy any long-term calls, I'd have to settle for far out of the money strikes. If you had 800, would you use it for 1126 weeklies? I mean, yeah, but I'm pretty. My risk tolerance is pretty high. Like, if I had $800 to use towards options, I would just try to capitalize on it as much as possible, even if that meant I lost it. In for a penny, in for a pound. I don't have an initial price target for selling off my core position, Red King. I'm not selling anything until there's a short squeeze and it's confirmable. At which point I have an exit DD that I wrote that you can check out. But I don't have a price target. What did you think of Pink Cat's response to your DD on the jungle? I didn't see it. You want to DM it to me? I don't really know. How do you identify peak volatility intraday? I'm guessing that is right after a very large volume candles. My understanding is that for weeklies, an IV spike is especially fleeting. Yes, it is. How do you identify the peak volatility intraday? I mean, your guess is as good as mine. I've been doing this for years. So it's, you exit. If you exit slowly, percentages of your position at a time, you're more likely to exit over the curve of the price action for the day, nearer the peak. And that's really the best you can hope for. And maybe some of that you'll sell at the peak. But I mean, yeah, no one can time the peak perfectly. You hope you do. Sometimes you get lucky and you nail it. Sometimes you don't. I called Fidelity, and the gentleman said they did do it, but when I initially chatted with them via Chatbox, they said they didn't. I have an FAQ from their website about it. Can do you? About I can do you? Oh, okay. I didn't realize I couldn't post just the link to it. God, these anti-brigading rules are so annoying. Does anybody know how to copy a Reddit post with images all in one go, or do I have to fucking completely edit it? Longer term first or percentage? Percentages. Average monk. By deciding on options that are in the money, does it make sense to spend more on a 190C has 70% IV versus a 20750, which has 76% IV? And the IV on those in the money calls, I mean, you're talking about a 6% growth difference, right? If IV goes up drastically. 225s are already getting so much cheaper. Yeah, they will. And the holiday will tick off on Monday too, off of the theta, I believe. So, okay, Oh, thank you, Ying Style. Yeah, if anybody wants to check out the cashless exercise, in your DD with futures dates, are you using log scale for analysis? I've heard you say before you do, but I'm not far into the recommended reading, so I don't know the reason. I am, and the reason is because the stock is highly volatile. So it's had large price fluctuations, and using the logarithmic scale helps normalize that. No, DM. Oh, Jesus, today I can't with my typos, and it's the one day you read my nonsense. Sorry, Smogs. But to my knowledge, it still applies to every experience I've had. Okay. Next time you can put the images on Imager, it makes it easy to copy paste the text. I could do that. I'm definitely not an expert at have you talked about your post being removed from Wall Street Bets? Do you know the reason for it? I don't. I would imagine just because it said MOASS. Garrick, your platform is amazing. You have very knowledgeable people on your Discord who have patience to explain complicated concepts to smooth brains like me. I made 515 minutes today. That's awesome, dude. That's what I always hoped to create. It's like a pyramid scheme, but in reverse. So if I teach a few, they can teach many. Does that make sense? The effects of the things people have learned in here are exponential. They will echo throughout. You know, that's awesome. You don't have to always use it, but I basically do. Initially, when I first started doing posts, I didn't use it because I thought people wouldn't understand it. And then I just got annoyed with using linear, and so I switched. But we're taking shots now? What? It's just Dayquil. I'm sick. I got sick because I haven't slept for 2 weeks. Teach a man to fish kind of thing. Yeah. Wait, you can make money doing this? Contrary to popular belief. Like a MLM? Sort of, except the marketing sucks. So like Like, it's multi-level, but there's no marketing. It has to be a text post, no links for DD on Wall Street Bets. Yeah, it's true, Pickleman. I was able to give a competent enough extraneous talk to convince my mom to buy 300 shares of GME. Oh, cool, man. Can you quickly go over ideal entries, exits for weekly calls for this upcoming week? The fact that market is closed on Thursday is throwing me off. Why? My ideal entries are when the price is low, and my ideal exits are when the price is high. I don't understand why the holiday is throwing you off. Maybe vaping the Dayquil will make it more effective. I've never tried that. I showed my wife your DD. She finally understood some of the words I've been using for the past 11 months. If she understood, you did an amazing job. That's good, yeah. If somebody completely uninformed understood it, teach a man to fish and he will sit in a boat drunk all day. Teach a man to gamble and he'll open multiple brokerage accounts. They, I posted on Wall Street Bets. They took it down because of a mention to Gex and Express. Gex is gamma exposure. You're not allowed to use stock tickers, and the whatever. This is why I lurked on Reddit for so long, because every time I tried to post something, it would just get deleted. It's very defeating. YOLO Gex. It doesn't matter if the moderators of Wall Street Bets are compromised. The people within it may not be. Hypothetically, if they choose to fail futures this coming cycle, what's the start of the anomaly window? Did the T plus 2 plus 6 plus 35 and landed on Feb 3rd? I'm wondering if you got the same. Yes. That's the ETF exposure date, not the anomaly window. The anomaly window is the dates from the first FTD through the ETF failure. The ETF failure in January occurred after everyone had sold their options off, which ultimately caused the price, allowed the price to drop. So they had ample liquidity in all that selling that occurred to cover that gamma exposure. And it would have been their greatest exposure, right? There are definitely some real degenerate gamblers in there. Yeah. Still in there, yeah. I agree. They don't allow tickers under a certain market cap. Interesting. Nice, secure. So Feb call encapsulates all of this. That's the idea. That's why I like Feb calls, because it just covers all of the run. There's not a lot of thought necessary. Right? You just let it go super deep in the money. It's easy to hold because it's super deep in the money. So Feb and out, you can kind of diamond hand, right? And that continues to force them to hedge. It continues their exposure past the Friday expirations of weeklies. But there'll be more on that in the next DD, which I'm almost done with. I've bought some calls already, Frank. But not all of them. Not all the ones I intend to buy right now, at least. Yeah, cost might run, but it has no options chain. It's tricky. You can't get a ramp. And then the family that owns all the shares just sells some off every time it squeezes. So, are you ready for 50K viewers when all of Matt Core's army sees the light and joins the cult? Absolutely not. I don't want to deal with that bullshit. It's too many people. I'm on a little on Cloudflare and Matterport. Should I sell to buy some GME shares? I don't know how to buy options, so I'm staying away from that. You can if you want to. I mean, hypothetically, if price action from last January replicates over the course of this cycle, you know, we could be in the next few days at the lowest potential entry for GameStop moving forward. This isn't even that bad of a price range to be at. We're holding the floor pretty well, but we could come down more. And if we do drop below 200, that's I think an excellent opportunity. If I didn't have the shares I intended to buy for GameStop already, I would be looking, at any dip in the next couple days as a great opportunity to strengthen my position. Can you explain something for me, Gurk? Hypothetically, there's 100,000 in the money calls on November 19th. 50,000 get exercised on the 16th. Is that exposure present on the 16th or T+3 from the 19th? If they're exercised on the 16th, then that exposure is T+2. So those shares need to be bought at market within T+2. So, Eggnog Seller, what does Gurk mean when he says options go super deep in the money? So, say you have a 300. Now, this call is currently out of the money, right? As we were trading at down here at 208. As the price climbs, these go into the money. And the more the price climbs, the deeper in the money they become. Yeah, no problem, James Fisher. If Citadel gets liquidated, would that actually crash AMC? Because they are long on it. I know people always say they will run together, but I don't actually think they will when MOASS happens. I mean, Sally Snipes, I think that they use AMC as a volatility hedge against GameStop. So, you know, they use that split FOMO in order to capture gains on volatility there in order, and as a hedge, right? Like they're hedge funds. So there always has to be an inverse opportunity for any position they're in. I think AMC is that opportunity. So I think it can run, but I think if GameStop gets out of control, which I expect it can, then they will flash crash the shit out of AMC and pull their money out and use it to hedge. And if they get margin called, that's the scenario in which that would happen. So, you know, the elation will be at all-time highs over there, and then all of a sudden the price gets rug pulled. And I think there'll be a lot of people wondering why. And that's possible on AMC because not only is the FOMO into those two stocks split And not even evenly. The FOMO into AMC is far greater, right? As it's a cheaper stock, so the capital requirement to get in on it is lower. But the liquidity presented in the float makes it an excellent stock in order to hedge that volatility, because there's shitloads of liquidity in AMC because of all the shares they've released. I don't know, JC. Probably. I don't think the other meme stocks have the same breadth of a short position on them. So I think they'll run, but maybe not as fast, maybe not as hard. I mean, that has to do with the ETF exposure. You've quantified max loss on calls, so why not spend 40 something or something and learn? Yeah, I mean, it's a great entry opportunity, and you could definitely make some profits by just taking $50 day of and tossing it into some out of the monies and seeing what happens. I'm not saying that's like, it's not a bad opportunity to learn, and there is, potential to it. I just don't like the idea of people throwing away money without knowing what they're doing, because I think that just breeds more negativity towards options, and so I'd still advise against that, right? It was like, oh, I bought $50 worth of calls, I lost all of it, and like, that guy's gonna go tell 10 guys about that, and they're like, what are options? He's like, well, they suck. And then you got fucking 20 people that think options suck, and then that just continues to spread because one idiot made one mistake. Nice existential. A friend in the market is better than money in the purse. Clip the AMC talk. I don't know when it started. I'll just clip this section. Is volatility spiking to 100, 120% next week feasible? I think that's a very conservative range to look in. Can they partially cover exposure all 3 days and just short in between for next week? No, that's not how that works. So you're saying they're gonna run it up and then short it down and then run it up and short it down? You have to remember that as they run it up, they have to hedge, right? And that causes it to run up further than they want it to. You're also not factoring in the bid-ask spread there when they're on the buy side. Thoughts on December options? They're not my favorite. There's some weeklies I like in December. The 24th, the 17th. I don't hate if they roll. If they don't roll, the 17th suck. Unfortunately, there's no way to know until the time comes. I might pick up some like 17th calls as like a hedge against the rule, but I mean, I already have Januaries and they do that as well. So I don't think I really care about the December 17th calls. You think the holidays next week affect the run up? I mean, the holidays don't fall on the settlement window, so no. If the holiday was on Tuesday or Monday, that might make a difference. But by the time it's Thanksgiving, the settlement period is over. Add button? I have an add button. I never use it, but I have one. Do you use limit order to enter exit your option plays? Generally, yes. Because I don't want to buy the ask on a market order. Although if it's moving, that can slip away from you. So sometimes there's a time and place for a market order. There's a button for ads? Yeah, I don't use it. Somebody told me to do it when I stepped away, but it seems that YouTube plays ads automatically when I mute my mic. So press the add button to punish the users using ad block. No. Aside from auto exercise, if in the money Fidelity only manually exercises on the phone with a live trader, but they can combine the transactions for you at the time. Okay, cool. You did it for like a day or 2 months. I have YouTube Red. What are ads? Yeah. I'm going to be doing market orders on Tuesday, I think. If we haven't launched yet, we will be soon, and I will spend all of my casino chips. Is it more advantageous to exercise or to close and take profits? I mean, if you want a short squeeze, it's more advantageous to exercise. If you think the price of GameStop can keep going up past the expiration of your contract, it's more advantageous to exercise. I think the question you ask yourself is if you have an in the money contract, especially a deep in the money contract going into expiration, is are you long? If you are long and you think that there is room for price improvement, then you exercise. It's just the correct answer. Clip what? When sell call options, what are you looking for generally? Money? More money? It depends on the play. This is like a highly volatile stock. This isn't the things that apply to normal stocks don't really apply here. Like I'm not looking for 10% gains on GME options. If we run next week, what would you do with your 222 calls? Hold them and hope they go deep in the money, or sell them and look for another entry as price potentially trades sideways into December, January. My 218s, I don't have 222s. I'm probably going to hold them and just average down. I'm just going to keep buying more of those. Obviously, that's not the same for everybody. But we're not trading flat or sideways from December to January, right? Because we have an ETF exposure date. We have the ETF leap date on the 22nd. The T+2 is on the 22nd from December 17th. ETF leaps. GME monthlies expire on the 17th of December. And the exposure date is the 22nd. Just wondering if you can make a support line on the log chart, like long term. There's a few. There's this one, which is like the midpoint. There's a high, which is this one. And then there's a low, which is actually out here. And the upper trend is technically flat. And it's like here at $300. I've traded very little volume above $300. I love it when the stock does what I want it to do. Oh, fuck. I forgot to update Reddit again. What's your opinion on why we haven't seen heavier shorting to bring down the price the past 2 days? Well, yesterday morning we had a big run up, and I think that was the effect of the final. Like if we go back here on the 1 minute, I think this was the last of the exposure. Remember, because the orders have to be placed by market open, for T+2. So I think this was the end of the exposure. I think they brought it down. I think buy interest is picking up in GameStop. I'm seeing more retail orders print this morning. This I don't know what it was. This could just be FOMO. It could be an institutional buy. They tried to short it, which indicates they were trying to bring the price down, and something happened. I don't know who bought this or what bought this. It could have just been retail buying some shares. The volume wasn't significant. It could be options hedging as contracts start to roll in. But I don't see there being any more exposure for the rest of this week. So I do expect we can go down. Potentially we could go down all the way into Tuesday. What's your opinion why we haven't seen heavier shorting? Okay. What about MOASS being more pulsed, taking longer time frame is 6 months plus? If point of no return was at 1,000 last January, perhaps that level is far higher, like 3,000. I think the point of no return is still at around 1,000. At $1,000 a share, GameStop is worth more than the combined assets under management of Susquehanna, Citadel, the hedge fund, Melvin, 0.72. So those positions would be blown up around $1,000. Smaller ones would be blown up far before that, which would only further drive the price action upwards. Right? If January was just a hedging, like Volga-Vana squeeze, right? And like it was just volatility hedging, and gamma hedging, or delta hedging. And then we start to see like what it could have been had it been a gamma squeeze, right? So, you know, if why is it doing that? Stop that. Okay. So, you know, if this was a delta squeeze, like just delta hedging, like a ramp, right? So delta ramp plus volatility squeeze. And everyone sold out of their options, hence defeating the ramp and the squeeze. If we'd gotten a gamma squeeze, the price would have continued up, right? Because if the contracts were held out further and exercised, the price would have continued upwards. And then, you know, here at around $1,000, that would have triggered a short squeeze. But Citadel turned off the buy button. People got scared and, you know, sold their options contracts. They sold shares too, but not as many. But mostly they deleveraged the short hedge funds. And once the short hedge funds and the market makers and the APs no longer had to continue hedging, that allowed them to maneuver their position and begin shorting the stock as hard as they could, which drove the price down to about $40. So had those options been further out, you know, had those options been exercised, this price action would have just continued. But there'll be more on that in book 2 of the DD. Oh, it sounds douchey when I say it like that. There'll be more in the DD. You getting saucy tonight? Nope, just working. I worked till 5 a.m. last night. I'm going to continue. Got some more LRC news. What is it? Talk to me, turd. How do you think earnings will affect price action in December? We could get like a weekly IV crush. It'll depend on what's announced, right? Earnings are, I don't know if they'll be good or bad. Earnings, like trying to figure out GameStop's earnings is complete speculation. They could make massive announcements. They could say nothing. They could release shares. They could not. I mean, there's just too many possible effects to consider it at the moment until it happens. That's not a bad plan. Do you see AMC having a spike before it gets rug pulled or flash crash? It could, but GameStop's just going to rocket after the. If that's correct, and AMC is in fact the hedge for GameStop, AMC is like they'll both run together, right? And then when AMC gets flash crash, GME will rocket. So if you're waiting for this moment, that's a terrible fucking moment. Because you have to be out of this and into this instantaneously. Because minutes later, you're chasing. Selling some of the options to be more comfortable. Would it be better to save some of my orders being placed tomorrow to buy in cheaper Monday? Like, would it worth risking being late? I mean, I'm buying some tomorrow and some Monday. I'm fairly confident in that they're gonna wait, but yeah, I mean, the purchase I make tomorrow is just simply a hedge against them running it on Monday. So I'm paying for extra theta tomorrow to ensure that if they do run it Monday, I'm able to capture that run. Jeremy Davis, coffee for the long night of work ahead is on me. Thank you so much, Jeremy. I appreciate that, man. Let everyone know that exercising is the way, not selling shares and making money. Well, they're both the way, right? Because the selling shares and making money provides the capital to buy contracts that can be exercised. Essentially, market makers shouldn't be profiting off the movement in our stock, and we're not, right? Clip what for Reddit? Dave of the Pigeon Whale Daves. Yeah, I mean, I'm buying. I said I'm going to continue buying Fed calls out of the money. Like I will buy those as price action improves. I will buy those all the way up to 950 if they open. I will buy 500s. Wow, shilling out your book already? Are the books hardcover? Don't even start with that shit. I'm going to take this and I'm going to bind it and it will be with me forever. Thank you, Atobit. If I'm priced out of Feb 18, 510, would it be advantageous to buy into January 21st, 420, then roll them to Feb 18 at better strikes later after taking advantage of the November, December runs? That's a way to do it. Yeah. It requires some skill, Dan J. You got to work a little harder if you're poor. That's really what all of this tells you, right? Is that, if you're broke, you might have to take a little more advantage of the situation. If you got a shitload of money, you can just buy, January 24th 200s. Thoughtbot for mod. I mean, what? It's hot girls and boys. Clearly, you don't know how hard it is to jump from one full speed train to another. Yeah. The amount. Matt Kors might say AMC is being shorted by GameStop. God, I wish I was dumb. If I was just a little dumber, I'd be a little happier. Can you please give your opinion on when you use log chart versus regular chart? But I don't really ever use linear. You can use it if the stock is not very volatile, Stefan. But I basically 100% of the time prefer to use logarithmic, and especially if the underlying is volatile. How do you feel about 230C November 26th versus 270 December 3rd? Similar pricing. I mean, one of those can probably go in the money. The other is less likely to. Don't clip sell one to exercise 100 because people won't read past the first two words. I hope that in the coming DD I can lay out what I think is, the facts behind MOASS, right? Like how MOASS happens. And I really believe that Gary Gensler gave us all the information we ever needed in that report to understand not only how MOASS happens, but how we are the largest factor in it occurring. It is a self-fulfilling prophecy, I think, entirely. I mean, we know they're exposed. But the question is do we take advantage of that exposure or do we not? For those that can take advantage of that exposure and want MOASS to happen, I think that this holds the key to that. I think that exercising those options is the answer. It is the trap that retail is able to create for short hedge funds, if they so choose. All I can do is point it out. I will try my hardest to point it out to everyone who will listen. But ultimately, it's in everyone's hands, right? It's another prisoner's dilemma, right? It'd be a pretty decent price drop by Monday. STM, RCS. I'll probably use stop limits. Do you have someone working on PDF versions of the new DD? I don't, but I'm sure someone will. It doesn't. There's many ways to not have $20,000, $30,000 cash on hand to exercise. This is Vic. That's not true. There's cashless exercise, there's exercise and sell to cover. Every broker has different options. You can buy 2 contracts and sell one to exercise one. If the price runs up to $10,000, you can sell 1 share to exercise a contract, or 2 shares, effectively multiplying your GameStop position by a factor of, if you have a $200 call and the price hits $10,000, you're multiplying your shares by 50. So you sell 2 and you get 98. Or you net 98 shares. And you're buying those shares for pennies on the dollar, even at our current trading price. You say a February 350, or even a February 210 is expensive, but look at it this way. You're buying 100. If the price continues to go up, you're buying 100 shares of GameStop at $35 a share. Everyone always says, oh, I wish I bought GameStop when it was 40, and I wish I bought GameStop when it was 11. But it's for sale at those prices, provided the price action keeps up with it. But that's what I'm saying, is by buying those calls, retail forces the price action that drives those calls up. If you expect drop on Monday, why buy it on Friday? Because they can start covering on Monday. The exposure is present that day. So I will be buying some on Friday. Not all of it, but some on Friday. To hedge against them possibly running the stock in pre-market into Monday morning. Because you can't buy options in pre-market. Does that plan change if your bankroll was 10x, 100x? Yeah. I mean, if I had 100 times more money to throw at it, I would just buy like January 24s. Like slightly out of the money, like 250s or 300s for January 24, and I just buy hundreds of them. I wouldn't even fuck around with weeklies. I fuck around with weeklies so I can make my bankroll 10x or 100x. Yeah, if I put 10% of my capital into weeklies and I 10x it, right? Then I now have 100% of capital to deploy on weeklies, and 100% of my capital, or 90% of my original capital in the long dated calls, right? Then I'm playing with the same amount of capital on the short term as I am the long term. And some of my options on August 24th, like 30x'd. Unfortunately, I played the role. And I think that's why I'm so adverse to the December 17th now. Is because playing that role is risky. Because it is a coin flip. We don't know. If you have 1K for weeklies, how much did you spend Friday versus Monday? I'm splitting. I think I talked about this before, KO, but I'm splitting my entry 30, 40, 30. So if they run it Tuesday, I'm already 70% in. If they run it Monday, I'm 30% in. If it gets run after Wednesday morning, I'm 100% in. Or Tuesday morning. Sorry. But that's greed. Like throwing all your money, if you do have the capital to play safer options and you're throwing all your money into weeklies, you're gambling, you're trying to get a rush out of it. It's not the smart play. Weeklies are, either for a small amount of capital or for people that really need to grow the capital that they're investing. So you take the risk to realize the growth. Otherwise, you just don't take the risk, right? If you have plenty of capital to deploy, there's no reason to take any risk. What? No, they're less expensive the closer you get to expiration. If I buy an option one day and sell it the next, would that be day trading? No. For pattern day trading, if you buy an option on Monday and you sell that option on Tuesday, you do not get a PDT violation. Options have a settlement period of T+1. That goes for the funds that come from options as well. What's the argument to buy lower strike prices in Feb? They have to be hedged more. So the lower strikes have a higher delta. They both have a place. Right? Higher strikes have more room for growth. As their delta goes up. So it's an interesting position. They have to be hedged on the near the money and slightly out of the money, right? Calls more than they have to be hedged on those far out of the money calls. But by hedging those nearer the money calls, that drives the delta up, which then forces them to hedge the out of the money calls more and more, right? Ramp, delta, or gamma ramp, right? That's the exact action that drives the movement of a gamma ramp. That's what we saw last January play out. That's why we constantly went up, because of that massive amount of open interest. And very likely they did not hedge appropriately, but it didn't matter because everyone cash settled their options. So those people that had those $20 options, right? Those $20 contracts that went to, when the price was at $400, if they'd exercised, they would have demanded a share settlement for that contract, which would have forced the market maker or whoever wrote the call to go and get them those shares at market. But instead they cash settled, which allowed, guys like Citadel to internalize those orders. So they lost money, right? But they didn't lose as much as they would have if they'd had to go try to buy those shares at market, right? Because buying 100 shares at market, multiple times over is going to drive the price further up. And then what you get is you get the, and you get that sentiment that everyone has that, oh, it's different now. Things have changed. Options are more expensive. That's bullshit. GameStop's more expensive. Right? So if we grew 2,700% last January, there's no reason we won't do that again. Right? So that you're looking at these like $500 strikes and you're like, but when people were buying $20 calls on GameStop, the fucking stock was trading at like $8. So you're talking about a $400 strike being super far out of the money, but when the stock was trading at $8, a $20 call was super fucking far out of the money. And that, but they still realized that same amount of growth. But if people hadn't cash settled those options contracts, if people had exercised those contracts, we would have gone to the moon. We'd already be there farming our tendies. Yeah, I'm clipping it. Is AMC being the hedge for GME the reason why Citadel is long on AMC? Likely. I don't remember a user. A Fidelity EFT? Just like a transfer? A wire is usually same day. I think the transfer will depend on your bank. Check your DMs. The cure's trying to get your attention. Oh, that could be cool, Zakir. I'll talk to you more about that after the stream, man. Are you sure you won't marry me? With our attendees combined, we could rule the world. Rule the world. No. You're just going to lose all your money and sue me for half of mine, Moonwind. Oh, turd. First front end proof of LRC collaboration. Huh. Am I making money on LRC right now? Is this driving FOMO? Just clearing this up. So when I exercise my 200 call and the price of GME is 400, they must buy 100 shares of GME at $400 a share. Well, not if they've hedged properly, Tom. Now, if they've hedged properly, they've been following the price of that option all the way up, right? Proper hedging, proper delta neutral hedging. Means that when you go to exercise, they are fully prepared to give you your 100 shares. But the reality of what goes on with GameStop is they do not properly hedge. And so, yes, they will have to go find however many shares of that contract they have not hedged, which could be all based on the internalization numbers, at $400 a share. Do you expect the price to drop after rolling? Into 10. Think of rolling your November 26th into 12/10s? For what? What happens on 12/10? The roll date is beyond the ETF exposure date. So if the price, if they roll, the price will just continue up until 12/10. But there's no way to know if they fail. Here's where you get burned trying to play the rule. If they fail to roll, then those options will become worthless very, very quickly. More AMC talk to be worried. No, nice for us worrisome folks. Nope, Citadel can't give you IOUs. You have a contractual obligation for 100 shares. There is no can kicking. There is no failure to deliver. If they are not delivered, the buy-in is forced. Another fun discussion about options is that when you exercise, they can either just FTD you, give you cash instead, or just give you synthetics. Thoughts? Okay, if they if they create synthetics to give you, they then have to cover those in T+2. Right? So that means they can the only can kick they can do and the only can kick that's feasibly possible is another T+2 before they then have to. And by printing synthetics, they're just printing your shares to their margin, right? So they're internalizing your exercise as well. So there's no way of them getting out of paying it. What happens to the additional value in excess of the intrinsic, that is cash to bank account plus shares? So the additional value is gone. That is the downside to an exercise. You lose the IV and you take a hold of the underlying. But if you have shorter term dated calls or calls you're not exercising, you can cash out your IV over there. If you have, if you buy all your calls in sets of 2, you can cash out one here. So, if you have 2 300Cs, I've used this one a lot, and the price spikes, to 600. I think we did the math on this. I clipped a video, I know. I think you get like contract value of like 35,000 something. And you can sell one of these contracts and exercise the other for 30,000, and you still get half the IV, right? You get 50%. If you sold both, you'd get 70 grand. But instead, by selling one and exercising the other, you net 5,000. So you're going to capture some of those IV profits that way. If we spike Wednesday, can I still sell Friday? I mean, your options will be worth significantly less if you sell after the spike. Same questions. 5 to 10 on repeat. Thanks for staying epic, Girk. You got it, man. If you want to buy at the money and out of the money, but are not rich enough to buy both on Friday and Monday, would you buy at the money on Friday or the out of the money? I'm buying my at the monies early. I'm buying my out of the monies as late as possible, because those are the most speculative, right? Like that at the monies are likely to print. Those are my safer bets as far as a weekly is, as safe as you can get on weeklies, right? Like those are my safe bets. And so I will be placing those first, and then the more speculative options that I purchase for the weeklies, I will buy further out. I keep hearing people talk about options like the other side of call is written by the MM, but how much of that is bullshit and how much is because of hedging? I thought it was other investors writing. I mean, the majority of call contracts are written by the market maker. It's their job to provide liquidity in the options market, and the options chain is DMM. That is a requirement. So yeah, they will continue to write options. They have to. To get out of this, something has to break, right? For them to evade that, they would either they would get removed as DMM. They would blow up their margin. When they internalized, did that happen when the buy button was turned off? It happened all the way up until they turned off the buy button. Immediately after turning off the buy button, people started selling their options. People got spooked. People weren't selling their shares, but they were selling their options. And, then the same time frame, they started buying puts. Tons of them. Dollar values were astronomical. And then as soon as everybody had sold off their options at the peak or slightly below the peak, as the price was coming down, they were able to reposition their margin and begin placing in the money puts in order to bring the price of the stock down. And then they could start selling off all those positions that they had hedged. So any hedging that they had done, they were able to sell. And they took the loss on the internalization, but the effect was the same. They were able to bring the price down finally. After they had, and that's the one event where you knew they were about to be fucked because they did something likely illegal. That is like illegality is always the last ditch effort. So turning off that buy button meant they were close to being fucked, which meant likely that Melvin was close to being margin called. You think they try shutting off the buy button again? Maybe. Who cares? If you have options, they have to keep hedging them. They can't turn the buy button off on that. And they're already exposed. They're already forced to buy during this cycle and to hedge and to cover gamma exposure. The FOMO from the buying of shares was never that important. It happened, but it was the options that drove the price action. Because options are leveraged to shares 100 to 1. So price to leverage, that price movement was because of options. It wasn't because millions of people were buying a share each. It was because millions of people were buying 100 shares each. So let's get this right. There's no real shares out there. Most of the outstanding float is being registered slowly. All of the option shares are being sold in puts and calls. Can't synthesize? You got to rephrase that. It doesn't make any fucking sense. We had to deliver 250 million shares. Peterfly? What's that? Would you say the higher the assets under management of an institution, the more they care about legal risk and retaliation to financial risk? So everyone says that, like, even Lauers said that, like this like fine is the cost of doing business. But I think the real cost to a lot of these funds is losing investors. I think they're far more afraid of losing an investor than they are of, the fines. But yeah, I would say that the bigger the entity, I don't know, in one way they're more insulated from legal risk. And people ask why Robinhood blew up, but Robinhood's got $80 billion in assets under management. They're fucking tiny. Of course they blew up. Nobody else had any issues that day, right? It was just them, because they're as far as funds go, they're super small. Options that were moving into the money be worth the leverage. The price at the money weeklies will drop significantly tomorrow. Pretty expensive right now. They should, yeah. They should drop more tomorrow, next week. He's the IBKR CEO. Oh, okay. Jimmy calls our pricey as fuck. It was Apex Clearing's issue? No, it was Robinhood's issue with Apex Clearing. Apex had an issue. All the Apex brokerages were down for about an hour. But the shutting off of the buy button, that only occurred on Robinhood for multiple days. I had calls in WeBull at the time, and I didn't have any issue selling them. There was like an hour where I couldn't, and then it was back online. They're a lot more reasonable now than they were earlier in the week. Thank you for preaching patience. I still am preaching patience. Options are all about timing. Being in at the right time and out at the right time. Can you explain to me with that giga brain of yours why my 300 calls are down more than my 350s? They have lower IV or their IV dropped off. Is there a place on WeBull charting that I can look up historical IV? If not, can you recommend a place to look at that? I think TDA has it for free. Otherwise, you have to pay for it, Ollie. Harry Borchers, could you speculate as to why MMTLP is sell only on certain brokerages and not others? MMTLP sell only on certain. I don't even know what that is. Is that the Matterport? Some brokerages don't allow those trades. That's all it is. I think Schwab allows like a lot of that like pink sheet shit. Yeah, I'll buy some on stream tomorrow. I got pretty scared when they allowed to buy shares again. Okay. Will you sell your calls if we run up Monday or Tuesday and take the profit? What's the minimum profit for you on your calls next week? For example, anything above 20, 30. I'm looking at resistance levels. I'm looking at the test of 225. I'm looking for a breakthrough, a test of 250. I expect that the profits would be far higher than 20, 30%. But if that's the profits you're comfortable taking, nobody ever lost money doing that. Are you buying any 200 strike options or all 210? I will be buying all out. Like, I won't be buying anything in the money. David C., welcome to Long Johnson. Thank you so much, David C. I appreciate that. Hit me up on the Discord. Nope, don't do that. You're all good. Thanks, Dave. Oh, and for those of you that are in here that think that you can DM me on Reddit and ask me to figure out your option strategy for you, you're not ready for options. If you don't see the potential in the price movement and where to mitigate risk, then you don't understand options well enough, and you should probably stay away from them and just hold. If you want to use it as a learning experience, then I hope you realize the risk that comes with that. What price target prices are you looking at for the 26 on AMC? I'm not buying any AMC. I don't give a shit about it. I just won't buy the stock. Like, I'm not buying Citadel's long volatility position. What's the price target for next week? My conservative estimate is between 225 and 250. That's what I'm looking at. Is it possible that it goes higher? Yeah. Price target of 0? This isn't Citron research. You can market sell options. You'll just sell at the bid. That's all. I don't like doing it. I'd rather use stop limits. Is actually Matt Kors trying to get financial advice in your DMs? No. But a lot of people do. A lot of people message you on Reddit. They're like, I have $500. What should I do? Or I have $1,200. How do I do this? I'm like, I respect that you want to be a part of it, but you need to learn more. There'll be time for you to buy in later. This isn't the end, right? There's always time to buy and time to learn. Well, if I could spend my gains financially ruining Rocket Mortgage mouse ID, then I'd finally put my UWMC in the money. I didn't answer your questions, but I did think for you in Pigeon Wheel chat. Awesome. I'll check it out later, man. Thank you. From a purely money-making perspective, what would make the most for an investment? What would make most for investment than the 950C 12022? It'll be the most if IV moves to 90, 120%. Is it? Let's find out. The Dans will never be silenced. Silence of the Dans, you're back. Where have you been, man? We've had, so much time to learn. All right. What was I doing? Oh, option strat. Just taking 950 January 21st. If IV moves up, well, they cost 250 a pop. If IV moves from where it is now, November 24th, we were with like 1100. They're not terrible. Swoosh. Psych. I don't know. Thank you so much for becoming a billionaire, man. I appreciate it. Hit me up on the Discord. I'll get you added to the country club after the stream, dude.
I want to be a billionaire so freaking
It's pronounced Poochie? I don't think so. Psoosh? Hold on, I'm trying to figure out these calls. I was gonna do this tonight, but I feel like I'm just gonna be writing DD. Or 300. I mean, 300's like day of basically net the same profit, and they're half the cost of the 950s. I'm not epic penning. I'm just looking at option strat real quick. Ko-Fi missed? Oh, I'm sorry. I've had prices fall through my stop limits without getting a fill on fascinating options. Is there a good way to prevent that? Give yourself a wider spread with your limit order. Your limit order will fill at the highest price available above, but yeah, spread your limit down for high volatility. Rocket Mortgage put their pick. God damn it! Would you like to invest in a mortgage? Contact one of our specialists at Rocket Mortgage to get an application started. Fuck that. Watch a bunch of degenerates start blaming you for them losing on options they didn't sell when it's green by 10x. Yeah, I know. Around 5K, I'm hoping to buy two 220s, two 240s tomorrow, two 220s, four 250s on the 22nd, and four 250s on the 23rd. Does that sound like a good plan? What are your expirations on those? I'd imagine those are further dated, right? Those aren't weeklies. The 220s might be kind of high right now. The narrative will move from Gherkin is DFE to Gherkin is a shill in about 20 minutes. I was looking at weeklies. Oh. Yeah, it doesn't seem terrible. I don't know if that'll cost that much. Even tomorrow, that'll be cheaper. 220s are 620 at the mid. Down about 5% today. 232s are down a lot. I like that. 360. Fucking. That's not bad at all. Low IV too. Lower IV. Should I wait until end of day tomorrow to buy my options or just buy them now? I don't care. They might drop it tomorrow. They dropped it today. We're down today. Red. We'll see what happens. So it looked at Swaggy stocks. Their Gmail message board trends have keywords fear, options, never, GameStop, and money as the most commonly used words. Are you buying weeklies tomorrow or Monday? Both. Option strat seems to predict a large decay by Monday. Yeah, because there's a holiday next week. But I'm buying some in advance of that, just in case they run it on like pre-market Monday. So I'll be buying some tomorrow. Yeah, I'm just gonna buy some like crazy out of the money shit Wednesday. If they haven't run it by Wednesday at market open, I'm just gonna go nuts. I don't think the holiday should affect anything because it occurs after the exposure date. Switch it up to what? If it hasn't run by Wednesday, you're going nuts because MOASS confirmed? No. Just super fucking cheap options. It loses an extra day. Slayer of Dragon Slayers. Like, would they unravel the synthetics earlier to a lesser peak? No. It's confusing. They can't. The exposure doesn't incur until the options expire. The options expire tomorrow. So the earliest that exposure can occur is, Monday. This is to help pick up the extra 300 megabytes per second upload missing in your speed test internet photo, so you can finally have 1 gigabit per second. It varies. That was on my Wi-Fi. On the landline, I think it's much faster. Let me see. Does the value of a contract have to be higher than stop limit order value when you set it, or the limit has to be lower than the stop? Having trouble understanding stop limits for some reason. The stop is simply a trigger for a limit sell. So when the price hits the stop, the limit sell goes to market. That's all. It's just that's all it does. It's not complicated. So you want your limit lower when you're selling, you want your limit lower than your stop. Ask dry. Wi-Fi 6 standards on device access point to get 1G or higher over Wi-Fi. Oh, okay. Good to know. What delta IV you go for when picking options? I'm going to be looking below 0.5. I don't care about the IV. It'll go up. Can you teach us how to use shift search? It's pretty simple. Everything's there. I know they don't pay me. Wi-Fi 6 is legit. Serious on fidelity. Trade armor. When MOASS hits, you want to use that. What the fuck is trade armor? What road triggers do you set? Is there a scenario where you sell your Feb calls early and buy back in? If they go significantly in the money, but even then I probably won't sell them, right? Because they're so far out of the money right now that if they go into and stay in the money, then I would just hold them. Right? I have no intention of selling any of my February calls ever. I will average them down if the opportunity comes. I will exercise them when the time comes. That's what they're there for. Thing to let you exit positions plan ahead of time. Oh, weird. I don't know how that works. How many different brokers do you use? Did you get settled from the move? Fam good. I have like 6 or 7 brokerage accounts. 8. Move was good. Yeah, I'm not settled yet though. Okay. Just scored a PS5 off Walmart restock. Awesome, dude. You can adjust your stop and limit right on the chart. That's cool. Silence of the Dance, dude. Pigeon Whale? Thank you so much, dude. I think you're good. You should already be in the Discord. Welcome. Flock to your newest friendly whale. Enjoy your seat high above Lady VWAP, casting aspersions down on the pores. Thank you so much, man. I appreciate that.
It's a motherfucking pigeon whale. I scream certainty. $100 a month supporting Pi 5 stream. Pigeon whales coo and the profits don't stop. Praise be to that pretty lady named V. I hope you ain't gonna be a paper in a bitch you see, but most likely you will be. To be entirely honest, I can't imagine what you'll think with an extra 100 bones not in your piggy bank. But at the very least, it's safe to say you're smart enough not to be selling cover calls like Lumen, cause that's fucking rough. Once the day comes when GameStop finally leaves the stratosphere, we'll all be pigeon whales on Gherk's yacht. Hey, will you let me steer? Hey, seriously guys, not a cult.
How long do you ferment New York style pizza dough? Usually cold ferment 48 hours, 24 to 48 hours, depending on how far in advance I plan. Cold ferment means you ferment it in your fridge. It slows down the process. What do you make of this end of day price movement? Are you surprised to see it? No, this is pretty standard, right? For their lowering of IV. Like steady, consistent drop in price, without spiking IV. This like end of day like movement to the upside is just, you know, lack of doing anything, I would say, more than anything else. Hey Dad, do you think they will roll early? No, they can't. What do you mean roll early? Like the futures contracts? I guess they could try. It doesn't really matter if they do, right? How do you estimate IV if the stock reaches a certain? You can't, based on price point alone. Volatility is measured on multiple metrics. I guess you could. I mean, it'll go up if GameStop hits 300. You could look at weekly IV historically for what it went up. A fellow Peter Reinhardt fan. Who the fuck is that? Were you playing the piano for us yesterday? Are people on Reddit accuse us of being a cult? The song clearly states that we're not a cult. Don't be culty, guys. Groupthink is disgusting. Yeah, that's really like, the Spider-Man meme also. I got called out yesterday for not believing in the infinity pool by like 75 people. I'm not listening to them. I don't give a shit what they think. If they don't like me, whatever. I'm just presenting information. If you haven't taken on multiple wives, you're not a cult. I think that's the rule for male cult leaders. Good to know. Fuck you, Secure. Are we at least an echo chamber? Maybe. We could be an echo chamber. I don't know. I try to dissuade that if possible. Hive minds are the way to go to not groupthink. Thanks, Peter Dragon. Good to see you back, man. The whole thesis behind the infinity pool operates off the idea that hedge funds need to buy 100% of the real shares. Shutting down dissent is how you stop groupthink. Is there a cap on how high IV can go? Theoretically? I don't know. This isn't something I've ever thought about. Like it should be 0 to 100, but that's not the case. I'll have to look into that. I wonder what the historic highest. Yeah, I know it hit like 563% in January, but I wonder how high. Like if it is capped, like Ivy shouldn't be capped. It should just be able like to keep going. I have to think about that. There's a realistic cap to IV, but not a theoretical one. Yeah, that's kind of how I'm thinking of it right now. But it's like, I do wonder what it could get to. I mean, more than it hit in January, right, Danrod? I'm fairly certain there's no limit for IV, but how often do stocks run over 100,000%? Doesn't really happen very often. Yeah, you do need infinite strikes. I mean, GameStop has, I think, has some calls that have IV over. Aren't the Januaries like in the 300s? Or are they down? Oh, they're not. Interesting. 239 for like the far out of the money strikes for next week. Thursday for tomorrow are currently 4,300% IV. Are they? They're 533.19. Given the rise in market cap, GME should have climbed into the top 5 of the S&P 400. Should we expect price movement with the upcoming rebalance? Yes. Except, yeah. Top 5? Really? Apple, isn't like Apple in that? Or I'm thinking of the Russell 1K. Okay, never mind. They absolutely they need them to hedge the volatility backside snap. So once the price flies off the options chain, they can no longer hedge the front side of the volatility. So they can't long the volatility further out than that, and that fucks them. That's why they keep GameStop's option chain so wide compared to other stocks of the same market cap or value. Like our options chain is ridiculous. If I sell a share of Gmae to exercise my call, will I have to wait for the funds to settle from the sale? I don't believe so. I don't think you get a GFV from that. Because you're not using you're not using unsettled funds to purchase an asset. If it was certain, wouldn't it mimic it 100%? ETF exposure mimicking GME price action. And what part are you referring to, Bertuzzi? Can can you go like a little more in depth with that so I know exactly which part you're talking about and I can explain it? Or just give me the quote. If I have enough capital to buy two Feb contracts, do you buy two of the same contract or do separate strikes? I mean, that's up to you. You could if you want buy them at the same strike. If you get one nearer the money by buying at separate strikes, then that's an option. Section 2, the big boys. Some ETF basket stocks mimicking GME price action. Yeah, they don't move the same way. They don't have the same short interest. But their relative movement is similar. We run at the same times. We drop at the same times because they are all short in the same basket. But the short interest on GameStop exponentially larger due to Melvin and also GameStop's ETF exposure. GameStop is included in far more ETFs than many other stocks. Sorry for not knowing which part you were talking about. My head's just kind of in the next part of the DD right now, so I'm. But market makers open up new strikes if you get into short squeeze territory. Is that too risky even for them? I mean, they need to. Will they delta hedge them properly? Fuck if I know. Set you a pick in chat. Look what popped up on TDA. The Wells have been targeting. That's fucking funny. Dude, I'm gonna throw that in the daily. Looks like someone big's been reading my DD. Yes. Good boy, Quant Team Fuck Toy. Can they just make the option chain longer if it runs? Yeah. But not the week of, right? Or the day of. It's in the daily DD. You guys can look at it. See you later, hand. Thanks for doing this today, Pickle. We all appreciate you. If all my money wasn't in GME, I would sub and dono. Don't worry about it, man. Just a like and a subscribe. You're good. Appreciate it. It's me. I'm the whale. Since they failed to roll last November, do you think they see the danger of not rolling coming into December, January quarterly ETF leap expirations, as the anomalies would contribute to a raucous January? Yeah, but I think rolling also presents a great deal of risk, as it, pushes the price action further up and generates FOMO and interest far earlier than they probably want it to occur. Apparently, YouTube got rid of the dislikes. My bad earlier. Current IV is about 96, not 72. Oh, okay. Still a lot of room to grow. 4,000 for one contract. Is Melvin still losing money on GME, or did Citadel take over all their losing GME positions? I don't know. But I do think that short position has been packed away in derivatives. So you have 12 right now. That's sad. So we don't dislike Matt Super Chat anymore. But I don't like Matt Kors at all. I can't stand that fucking guy. From the sounds of it, you think it's going to run tomorrow or early next week? Yes. Have you read my DD? Check out the big DD down in the description. Donnie Krieger. When tomorrow would be your best to buy some options for November 26 weeklies? End of day? Probably. And maybe if we see a dip before end of day, I might buy in then. I don't know. I'll feel it out when the time comes. We're about to wrap this up. I think so. Stream with 7 dislikes, and I can still use it. Okay, yeah. Cool. I have them turned on, so people should be able to dislike if they don't like the stream. Big DD, small wee wee. Let's just see what happens. I can't read, but I'll have my wife's boyfriend recite it slowly for me. I'm busy tonight, Donnie. Maybe you can find someone else to do it. I love disliking your stream. I know you do, Dan Almighty. A bit of speculation. Do you think the CFTC's decision to suspend reporting is directly related to Jimmy short basket swaps? It could be. Although maybe not swaps, but single futures or single equity futures. What's the furthest out of the money contract for Feb 18 that you think is worthwhile? I like them all. Awesome, old school Steve-O. Congrats, man. Do you believe in Crayons DRSDD or DRS in general? I'm not against DRS. DRS is a very important element of this entire thing. By creating illiquidity and locking up the flow to the stock, you present something to put pressure against. Buy and hold has done this effectively so far, but the effect from DRS should be greater. So if you have, two slopes of a line on which one creates more illiquidity, DRS should theoretically create more illiquidity in GME than simply buying and holding. And I think if enough is DRS, it does present a chance for a short squeeze to happen based on a share recall from a lender, if the lender is willing to do a share recall due to failing of a locate. But I think the effect of DRS is most magnified in the moments where they need shares and they have to find them at market. I think options present the other side of that coin in that forces them to need shares at market. Yeah, no problem, man. What? Matt Kors is likely a shill. I don't know what he's shilling. I think just himself, right? But, I guess there could be worse things. Is he paid by Citadel? Unlikely. Does it matter if I day trade the yellow vertical bars option cycle the old fashioned way? Does it hurt MOASS potential? I don't understand options, nor can I afford 100 shares. I mean, if you don't understand options, you probably don't understand day trading either. Day trading doesn't benefit anybody. It provides liquidity to the market makers and allows them to better hedge. I'm not a big fan of it. I think you hurt the potential for a short squeeze that way. If you had $5 to spend on options next week, would you recommend option 1, Dan job behind the Windies, or option 2, a bowl full of Kenny's bull mayo? Thanks, Kirk. Appreciate the input. I'd probably pick a Dan job behind the Windies. I've heard they're quite good. Over these last few months, you guys have really mastered the art of the Dan job. Can't understand the significance of the article in the Daily. Can you please wrinkle me? Big fucking bullish bets. So you're buying Febs or weeklies or both starting tomorrow? I'm sorry, I'm confused and just want to make sure. I'm buying both starting tomorrow. If you're looking at a pure IV play and will sell on the first spike, is it better to buy higher strikes? You can profit more off higher strikes. Is it better? Well, it's questionable. It depends on how hard the stock runs. If you buy them too far out of the money, you probably won't realize very great profits. I'm just confused on how buying and holding doesn't lock up the float, but DRS does. If we have the stock and we hold, isn't that a form of DRS in general? Just holding with different broker, DRS broke. No, DRSing removes the share from the DTC, which means that when they go to locate a share to short, there are none available. And if there are none available, then the lenders have to be like, well, we've lent shares. Why are there none available? We have shares to lend. Why are there none available? Which would cause a share recall, as they want their shares back. I've never had a damn job. Also, Midland put their pickle in job. Thanks for my new treasurer position. No. Come to my dumpster. I'll give you the first one free. I'm all right. Does Coors have Asperger's? I don't think so. I think he's just an idiot. You know, sometimes people don't have a condition. They're just dumb. Would a share recall have the same effect as failing a margin call? Is there a difference and one we should prefer? I mean, a failed margin call is obviously better for us, but it has the same effect. It forces buying of shares at market. A share recall could actually clear the obligation warehouse, which could dump millions of FTDs onto the open market. Clip it. What daily article are you guys talking about? I must have missed something. It's in the daily DD. I posted it. Correct me if I'm wrong, but that's why people are here. Why? Is it? Ding ding. Have a good night, Ecstasy. We green, baby. We are very, very ever so slightly up 12 cents from yesterday's close, closing the day out at 210.12, which is, you know, fantastic. Thank you all so much for tuning in, guys. We did it. 12 cents was all we needed. Dad, you said we'd be red. Credibility destroyed. Thesis ruined. We're holding the floor. A much higher one than expected. It is a crazy day. Thank you all so much for tuning in. I appreciate it. I will see you guys bright and early tomorrow morning for, that's right, you guessed it, my birthday. Yeah, I'm gonna go work on the DD now. Probably well into the morning of my birthday. I'll see you guys all tomorrow morning. Have a great night. Not an advisor. Frigulon.